Yo, good morning, everybody. Hopefully, y'all are doing well. Let me know if you guys can hear everything okay, see everything okay. There's like music in the background too, so if you could tell me how the sound is, if it's too loud, if it's okay, just let me know that before we get started. Damn, I was able to get this thing to be a 1 second or like 2 second lag. That's pretty incredible. Like, dude, normally it's like 3 to 5 seconds. But we got really good connection for whatever reason today. Shit, I better have good connection. I'd be paying too much. Stupid internet. What's up, Emmanuel? Video and audio solid. Okay. So what about the music in the background? Is it quiet enough? Perfect. Okay. Good. All right. So I guess we did just have a little bit of news. It's not going to be too dramatic of a week, I'm assuming. We did talk about a lot of different things yesterday. Those of you in my private group, look what happened towards the end of the day. It filled in the whole regular trading hours gap. We called shorts in there. Pretty amazing day yesterday, to be so honest. Tesla earnings. Let's go check out some earnings. So today, okay, so we got Tesla earnings tomorrow. That's going to be interesting. So yeah, when you're around earnings time, you got to be cautious. That could be a cause for spectacular volatility. Like, dude, it's just another excuse that they like to use. Nasdaq is heavy with the tech. So of course, if tech doesn't do very well or they miss earnings or whatever, it could have somewhat of an issue. But yeah, this is the website that I like. It's called Trading Terminal. Why is it so big? Whoops. It's this website right here for you. Those of you that do like to look at the earnings. One of my students actually shared this with me. I think it's my student Nico, if I'm not mistaken. He has a YouTube channel as well, if you guys want to go follow him. I have a couple of students who are on YouTube, Harley being one of them, Harley Trades, and Nico. He goes by Nico Trades. But they're both really good people to listen to outside of this community, but I guess in this community, right? It's in our little universe. So go check them out. But yeah, so that's really all my concern is with earnings. We got BlackRock. It's not too many people today. Dominoes. Dominoes. We got Google. Yeah, so it's going to be pretty dramatic going into tomorrow. Google and Tesla are big in the Nasdaq. They have a pretty reasonable size share of the pie. So we got to definitely pay attention to what happens. Just keep tabs on it. It could just lead to some pretty wild volatility. Yeah, so given what we talked about on Sunday, if we just bring it back to what we talked about, if you guys remember, if you watch the video, which if you follow this page, follow what I do, and you do not watch the Sunday calls, you are literally shooting yourself in the foot, because we literally anticipated and said it was going to do exactly this. We talked about why that was a highly likely scenario, and prices pretty much went up into that. And then we talked about some of the buys being a little suspect because it was delivering pre-market open. And then we talked about the 7 a.m. reversal that would probably happen. Then we talked about the market maker sell model, which completely failed. Talked about the little market maker sell model, which we ended up being able to take a short on. Talked about the breaker up here. Talked about continuation. Talked about the regular trading hours gap. I mean, those of you in my private group, you guys know all the stuff we talked about. Outside of that, though, the overall narrative from Sunday that I painted, telling you guys what to potentially expect going into Monday or Sunday and Monday, we expected it to run up into this wick. And we now have these upper levels that we got to pay attention to, because if this holds this order block here, and say this displaces through this candle here, that'll be a potential change in state of delivery. And then if we can get a wick down into that, on top of the fact that this respects this candle here, you know, I really wouldn't put it past them to come and target some of this. We do still have a tiny little piece of inefficiency at the upper part of this new week opening gap too. Then we got the new day opening gaps in here. Got another new week opening gap there. Why is that there? I think there was a holiday of some kind over here. It's kind of throwing this one off. We have Friday there. Friday's close, and then what are they classifying that as? New day opening gap? It's kind of a weird discrepancy right there. Yeah, there's a, oh yeah. That was because of the holiday. It threw this off. Threw the tracking off on the indicator. We had that outlined in a gray box, if I'm not mistaken, from that time. But yeah, so given what we talked about on Sunday, like I said, I do believe that we're gonna have to now watch the respect that this has to this little midpoint, or just the midpoint, right, of this large wick. So if we go to the weekly chart, it's actually it's like the upper part of this one, but we also have this one as well. So we'll use this whole range, to be so honest. Drop down a little bit, move this up. So that is our weekly wick. We have a daily wick down here too, so that could be used as well. But I think I'm going to want to pay attention to this weekly wick. Again, there's really no news right now, so it's not necessarily permitted to trade pre-market open. You could if you want. We do have failure swing in here. Let me actually pull up some of my charts, by the way. I realize that I'm missing some of them. We talked about the dollar being accumulation, manipulation, distribution to the upside. If this is what happens, we may see a struggle for the indices to want to go higher. So our target's up here as well. I'm still not quite out of the woods yet from having this opinion. I mapped this out on Sunday. I said, watch that. It looks like we've gotten above it, and now we're starting to respect it. We're also respecting the new week opening gap here. So that's a change in state of delivery, or at least an early stage of a change in state. Once we get up above here, I am really certain that we'll get up here. And if that happens, then we'll continue to see declines in the indices. So we have that change in state of delivery there, right? You see how it respected that? Now we got this up delivery, down delivery. That's a bullish breaker. Okay. It's a breaker block. So as long as it stays above that, look how respected that right there. We also got an order block here too. So we got small market maker buy model, in my opinion. This is the accumulation, which should turn distribution on the right side. And this is terminus, full terminus. Okay. I'll just put it like this, actually. So we'll see if we can continue to see that go higher. On the daily chart, it looks logical. We have the wick model that I teach in my private group. Wick below that comes down, respects the midpoint, and now we're getting a change in state of delivery as well. So I think that that also supports this being accumulation, manipulation, distribution. If we get up above this high, that's a breaker. But again, we have this smaller one right here that's providing a bullish breaker after a stop run. So the only way that I'd be bearish on the dollar is if we can get the dollar to break this low, because then we'll have a multiple change in state of delivery to the downside and a disrespect to the accumulation, manipulation, distribution phase of things. And then we would put this on the back burner. But for now, I want to see if the trendline liquidity here can be targeted. Got a fair value gap right there, but we also have one right here. So we'll see. We'll monitor how price wants to treat that. If it gets above that, it's just another PD array that we stack in this area, aside from the volume imbalances, aside from the breaker. And then aside from this retracement, stop run into a previous balanced price range, which is also a breaker from this high, low that takes this low, higher high, but also in the larger swing, that's a low, high, failure swing, mitigation block. Okay. Brush. Oh, what the hell? So yeah, again, it's going to have to break this level down here. Like I outlined, I said this is my invalidation for bullish dollar. It's going to have to break down. We have a rejection block in here. Okay, so we're going to have to see how that's treated. Looks like it could gravitate there as a draw on liquidity, assuming that it's going to reach for the buy side up here. And again, getting up into that level gets us right above that breaker that I outlined. This high, low, reaching up to that high can be classified as a market maker buy model. This high, low, breaking above that high, which is this here, can also be seen as a potential market maker buy model, right, from that lens. So price should continue to get up there, right? And we'll kind of see what happens closer to the open. There's no news. So again, my rules around a time when there's no news is we have to use the macros, and I don't trade pre-market open. So we either have rules or we don't. And I personally am not willing to break those rules on a week like this. We're also towards the end of July. July seasonally is not necessarily the greatest time, right? It's the summer months. We're deep in the summer months. So that could lead to some issues sometimes. So you got to keep that in mind. So I'm going to run to the bathroom real quick. So give me a couple minutes. I will be right back. Yeah, I'm back. Yo, good morning, Axe. It's good to see you again. So yeah, think that go to the yields as well and the bonds. I did want to see this drop a little bit, get into this a little bit before it went higher, but it's just continuing to go up now. So nothing wrong with that. Direction wise, we've been correct. Buy side with the yields. It has some T there. Remember, why are the yields so significant? The yields have a positive correlation or influence on the dollar. Reverse correlation with the other assets like indices, foreign currencies. And the bonds, which is this market, has a positive correlation with the indices and the currencies, the foreign currencies. So if this goes lower and the yields go higher, that has bearish interest on those other assets. Remember, risk on, risk off. So you want to always be referring to that. And it looks like it's unfolding. So, you know, we could still see things go lower. Look at the impact that's having on the currencies, right? The GBP was all the way up here. There's SMT up there. The euro has been continuously bearish. Looks like it's still going to continue to be bearish, right? So, I mean, you could just visually clearly see the impact that these assets have if you just stick around and look at them for a little bit. It doesn't take a long time to see that there's a pretty solid relationship between them. So if the yields keep going higher, the dollar should keep going higher. The indices should have a little bit of interest to want to go lower. The foreign currencies should continue to have interest to go lower. Euro's obviously a nasty mess. So kind of is what it is. GBP is really, really picked up to go lower. We have failure swings down here. Got the gap right there. So if this breaks that low, wouldn't be a shocker if they wanted to try to come down and take out more to the sell side. We do have a high, low, higher high, right? If it was going to be bullish, we should not see it come all the way back down into that. It's kind of in a range, right? Pretty choppy back and forth range. We've had some displacement, but you know, it's not necessarily the most ideal scenario. We also have this gap in here. Prices solidly respected that. We're now below this candle. This volume imbalance with a bearish order block. That's ICT's indigo PD array. So that's something to monitor. So it shouldn't come all the way back up here, essentially, if it's going to keep going bearish. It looks like we're not going to really touch this up here, that little liquidity void. So for those that trade the currencies still, I'm still looking to see if we can't get the euro to target these equal lows here. Got that low right there. This low, relatively equal. We do have this balanced price range here that's been respected up to this point. But we'll see what happens. The dollar is going to be very influential as far as what we see price do. And on the 29th, so 8 days, we have a very, very big announcement. Federal fund rate. And then, of course, there's FOMC statement and whatnot. So, got to be cautious on that. And then when it comes to gold, we've peaked above this high here. So the only way that I would be looking to be bullish on this and not consider these lows here to be a target is if we break above it, close above it, come back down, respect that, and never reach the midpoint, and then start to see displacement. In that case, I would then look for levels like this up here. It's equal highs. But of course, for now, there's nothing really telling us that it's going to go higher. It's got 3 PD arrays resting. Let me remove some of these boxes. 3 PD arrays have not been violated. So we'll keep tabs on that. We are consolidated. So I would be trading a different asset if I was a gold trader. Seeing price look like this, I'd be moving on to another asset. But again, we have dollar going higher. As long as it stays above this wick midpoint, this low, and this gap in here, I think we'll be set to keep going. Again, we got the wick respect, stop run, balance price range, completed buy model, retracement, fair value gap, and price is respecting this. So if it gets above that, that's a change in state of delivery, with a lot of stuff on the back end supporting it. And we'll be reaching for the rejection block. Once we hit that rejection block, we have a breaker. That breaker should then result in us getting up to this level. We should purge this liquidity, and should be interesting. Okay, but otherwise, as long as this low stays intact, we're going to keep going higher. And if it breaks, then we see this run lower. So high, low. If it leaves a failure swing and breaks down below this low, what does this become? What PD array does that become? Let me know in the chat if it looks like this. Then it returns back up into it. Exactly, X. Exactly. Mitigation block. And then you wouldn't want to see it break this range. You want to see that lower 25%. Okay, but for now, we have an indigo PD array right there, like we talked about. It's also a change in state. So order block traded above. You see how the wicks are shooting into it, but the bodies refuse to close below it, that open price. So that's significant, right? We also have this monthly wick 50% level that it's respecting too. So it's just another layer as far as why this is holding. We went down into a discount, and now it's changed state of delivery away from that. When you have a retracement and then you catch it, you see a change in state that's dramatic after it retraced for a while, and it still makes sense for it to go higher, you can rest assured that that is a good timing tactic to utilize in terms of the PD arrays. Because if you get a retracement, you have to then look for a PD array that it's reaching for, preferably in a discount. Sometimes if it's not gonna be too heavy and give a deep retracement, say we're in a really heavy trending environment, most of the time it'll stay in the upper 25%. So you got to look for PD arrays above equilibrium. But when it can come down like this and then it starts to push away off of a retracement and we get a change in state, a lot of times a news event is required before this happens. Again, it's a higher time frame. News events are used as macros on the higher time frames. But when that happens, you can rest assured that it's higher probability that you are in line, especially after a stop run, especially if you could frame things out like this, where there's a breaker and all the other things we talked about, yields going higher, right? This change in state of delivery becomes a lot more significant. But we'll see, right? If this fails and collapses and breaks this, that's when we would then look for targets like this gap, the high here to the low, midpoint. And then we would just look for a retracement into that and the continuation. But we're not going to worry about that, right? Until proven. So yeah, with that being said, you want to keep tabs on this, right? Let me clean this up a little bit. So we do got a high, low, higher high. We got a wick in there. Okay, we got the weekly. Weekly wick midpoint. Right. Again, if price gets outside of this line here, I would see this as a market maker buy model. This high, low, breaking above to this high was a market maker buy model as well. So overnight, or in Asia, notice how we had a very fast Asia. We don't like that generally. It's been very, very exciting going in through London, mainly through Asia. London was pretty typical, kind of slow, very choppy. Seems like they're just working this upper level in here. So it really depends. If it's going to be bullish, we will never reach below this lower 25%. Right? It shouldn't have to come down into that if it's going to be bullish. But for now, because the higher time frame looks like what it looks like, it just looks like a simple retracement to then potentially go lower. Until that's proven otherwise, by 3 PD arrays being violated to the upside, we're going to stick to this being a retracement and potentially looking to want to dive lower. Again, there's no news, so I'm waiting until 6:30. Depending on how the open unfolds, I may wait till 6:50. We can only take trades if you're following my information and studying the way that I do things. When there is no news, I do not trade pre-market open. When there's no news, I do not consider trades that don't at least start a move from inside the macro. So last 15 minutes, first 15 minutes, or last 10 minutes, first 10 minutes of every hour. Right? And if I can't find a setup in the macro, but I can frame a PD array that's present in the macro that may get used later on. Like say there's a breaker that forms in the macro, but doesn't completely form. And then we get outside the macro a little bit, and then we return into that breaker that's in the macro. Maybe at like 720, 725. I'll still consider that as a area that price set up during a macro. It's still significant in terms of timing. All right, so just to make it even more clear, right? Say this is what formed in the macro, right? In this area. And this is the end of the macro. But then all of a sudden, going into 7 a.m., it reverses. And then we break above this. And when we come back, it's about 720. Right there. Now, I'll still classify that as something that was in the macro. But I have to see the PD array that formed inside the macro. Right? So this is another way that you can use macros. And again, it's not something I made up. It's something ICT taught. He's taught this before. Most people don't know this stuff though, because they missed it. But you guys now haven't missed it. So just another way to utilize the macros. It doesn't mean that if a macro unfolds and you can't find a setup, you just disregard it and wait for the next one. You could do that. But the PD arrays that form in that time window, that 20-minute time window, is very significant. So, just some stuff to think about. Oops. So yeah, it's going to be a lot of waiting. I want to wait for time. If you're chomping at the bit to take a trade, or you're waiting on me to give you a trade signal, you're doing it wrong. So just saying. We'll find something. Every single day we find something, so let's be patient. So yeah, hopefully everything makes sense as far as the lay of the land, what the battlefield looks like. We do have this high, low, higher high, a full completed market maker buy model. If we do end up getting this to displace through, we do have a gap up here, the regular trading hours gap I pointed out the other day. This is another piece of a regular trading hours gap that's unfilled. What do I mean by unfilled? Well, do you see any buy side delivery or sell side delivery in this part of the gap, right? After 6:30 on this day? Is there any trading up there? I would say it's not. How about up here with this little gap? What is offered there? Only sell side while we were in the regular trading hours gap. And you see how over here, how there was a little gap down here? I talked about this too and called it as well. You see how price magnetized towards that level and filled it in completely? How about this one right here? It left the gap right there. It's another one that I talked about. You see how the regular trading hours only offered this price delivery up here? It moved away, and then once it came back, what did it do? Reached right down for it. See how this one has both sides offered? It's got both sides offered entirely, so it's not as significant. It's a balanced price range. So what does it do? It comes down to the midpoint and reacts. How about this one up here? See how the open was here and there was no trading up there? What did it do? Gravitated right up to it. Almost perfect. And then once it hit it, it turned around. How about this right here? See that gap down below? So price rallied up. That was inefficient. Same with over here. We have this sell side, so it offered a little bit, but we still had that little part down there that overlapped this one that was inefficient. So what did price do? Ran down into it. So you can see how important regular trading hours gaps are. And if we move over here, you could see if it's going to be bullish at some point, once it gets the bullishness to unfold again. We also have this level up here. So that's a little bit further up here. It's kind of far away, so not something we'll worry about. You see that this one was offered, still was magnetized down into it. But generally, we want to see it left open like this. It makes it easier to target because we know functionally price is inefficient. So yeah, and it'll reach back towards it. Same with this. We had one-sided delivery. So what's it inefficient in on this regular trading hours gap? It's inefficient to the buy side. There's only a down close candle. So what's it going to do later? If it proves that it wants to go higher, that's in the crosshairs, and it dragged up into it. And then once it closed it, what did it do? It then used it as a balanced price range or inverted level to help act as support as it looked to try to target all of this. You see this one right here? Look at how big that was. Price shot up, filled the half of it, still unfinished business. So what did it do? Drag lower, drag lower, drag lower. And then the next week came and it shot up. We still have a little bit of that gap available too later on. Again, that's way up here though. But hopefully this is a very clear identification for you guys to understand, or clear description of the importance of that regular trading hours gap and how it can be incorporated in bias and narrative, right? Of course, you figure out what you're going to do in the higher time frame sentiment. But when you decide that, if you're like bullish, you also want to keep tabs on this. This indicator is for my private group. One of my students made it. And it's just one of those things that comes with being a part of my private group. It's the added perks. So how are you referencing them after they've been fully mitigated? Oh, they're still just PD arrays, just like everything else. Nothing gets mitigated and never gets used again. Many times, well, there's some stuff like fair value gaps that get overtaken. It may not come back for a while. Same thing with these. If it fills them, it may not come back to them for a while. But the reference points, if there's regular trading hours gaps or new week opening gaps, even from like a month ago, that price trades around on current day, those levels, if you can identify them, are still going to be used as supportive ideas, right? Because once you build your narrative, you're trying to decide if price is going to go higher. If you have your draw on liquidity and we're racing towards that level, all the PD arrays that you come in contact with should be looked at as potentially supporting your idea. Okay, it's going to be times when price stalls. Maybe like if it runs up into one of these levels, it may trigger a rejection for a little bit. So, but if we're bullish, that's going to be short term. And again, you got to be anchored on this higher time frame. But once they get fully traded through, it's just like a balanced price range, right? We have to have our target, and until our target's met, whatever the main objective is, all these levels that get overlapped should be used as supportive reference points. Same thing with every other PD array. If I'm bullish, I'm using bullish PD arrays to get in line with the trade setup, bullish PD arrays to help me understand, where price is going to utilize, or what price is going to utilize to support the idea continuing higher. You can also use them as continuation entries if you can get comfortable with a couple of PD arrays, and you could spot them. Like if you have a breaker as your main entry tactic, say this is a breaker in here, and then you see an order block that forms. If you studied both of those and how they relate in price legs as price looks for a particular target, you could eventually look to utilize them as continuations. Same thing with fair value gaps, same thing with all the other PD arrays that you're able to spot. But you got to have your narrative. Where is price going on the daily and weekly chart? Because once you understand that, if you could find setups on that lower time frame, as they form new PD arrays, bullish PD arrays are going to be used as supportive ideas. Inverse or opposing PD arrays that get traded into can be utilized as speed bumps in price, where it can trigger in counter trend moves. If it's on a higher time frame, you can have a whole counter trend trend that you can be a participant in when price hits those opposing PD arrays as you're looking for price to go in your main direction. So if you're like bearish and price trades down to a bullish PD array or like an order block, or like it takes out a low like that, anything that can be, anything that can be reasonably looked at as an opposing PD array. For example, if we're bearish and we see a bullish PD array getting traded into, that is when you can start to anticipate retracements or a speed bump may unfold. So if you're in the trade, you got to expect that opposing PD arrays will start to give you a little bit of traffic. That doesn't mean you disregard things just because it reacts from a bullish PD array. This is why you master the higher time frame and where price is going to draw to. So then when you're on these lower time frames, even if it hits a bullish PD array and you're bearish, you're not going to want to get away from the bearish trend. You'll just maybe, when you get more experience looking at it from this way, you may be able to trade counter trend as you wait for your main objective to be targeted like this. Right, this is a counter trend move to the upside, just to reach into a PD array to set us up at a premium to short even further because it was bearish, mainly. Right, it was consolidated, so you had to be a little bit more flexible. But nonetheless, you see the logic unfolding. Price was bearish, dropped lower, hit an opposing PD array that's bullish, rallied up, sent it into a premium, a bullish PD array, and then it continued to drop lower. Had a change in state. A second change in state that fully confirms that we're now going to keep going lower. Price gave one more retracement as we tapped into this bullish order block, but then we ended up continuing, right? Created this rejection, so on and so forth. So this has taken out the low there, hit a higher time frame PD array, and now it's triggered a rejection, which is again what we anticipated over the weekend, right? We talked about how this closure here was too aggressive off that low. I said that it's not a good idea to rush in and try to take a short. We got to wait till it runs up to this fair value gap or the wick at least, right? We're getting up to that weekly wick. We also have the daily wick that you guys see here as well. We hit pretty much precisely. So now we got to make a decision here. It's going to have to decide, is this going to be a retracement to go lower still? And then in which we'll look to use these lows here as our target. So these relative equal lows. Or is price going to start reaching towards our invalidation level? Okay, which for this time frame for the daily chart is going to be this fair value gap. Why this fair value gap? Because we have a wick here, multiple levels being violated. We have a wick with displacement. If it's going to go bearish, what tells us it's going to stay bearish characteristic wise is the fact that we would respect the lower 25 to 50% preferably the lower 25% of a PD array it trades into. And we're not massively overlapping bearish PD arrays. You know, once you have 3 bearish PD arrays getting overtaken, if you continue to force bearishness in that environment, you're asking to get blown up. You know, the next thing that gets smoked is going to be you. If 3 PD arrays get smoked, the next thing that's on the list is you. So that's our validation principle. That's ICT's validation principle, the most simplistic one that he's ever taught. There's more advanced stuff, which I teach. But again, if you want to keep it simple, super applicable, very visual, easy to understand, you know, you could just simply use that as your validation, and you use it on the higher time frame. And until that gets violated, 3 PD arrays against, in this case, your downside move, you continue to see every rally as a premium addition to go short, right? And it's all counter trend when it goes bullish until 3 PD arrays are violated clearly. Then, and only then, on the higher time frame will you switch your overall objective. In this case, go from down here to levels like this. Okay. Appreciate whoever just subbed, by the way. Hey, what's up? What's up, Silent? Happy to see you again. Welcome to everybody that's hopped on. If you're new, don't forget to like the video, subscribe to the channel if you feel you get value today. Only if you get value, right? Only if you think that what I'm talking about is being helpful to you. Don't subscribe or even like the video if you don't like the content, right? It's kind of pointless. But I think all of you guys will get value from this. So, and we do this twice a week here on YouTube. I've been doing these marathons once a week, or once a month, where I go live pretty much every day, showing kind of behind the curtain of what we do in the private group that I have. And again, if you don't have any interest to join the private group, I'm sure you'll get enough value just simply being here as well, just on YouTube. And if you support what I do, the best way that you could show that is by liking the video and subscribing to the channel. Again, only if you get value, right? Don't just like it because I told you to. I want you to sincerely get value from the content. That's why I teach the way I teach, right? I did good performance yesterday, and today was small things I did when I woke up. Yeah, it makes sense. See, so you already did something. You engaged. What are your business hours? Are you an AM session trader? Are you a PM session trader? Are you a London trader? If you're deciding on one of those times, one of those sessions to be your business hours, you are not permitted to take trades outside of anything. So yeah, it happens to the best of us, Silent. Don't beat yourself up. I'm not sure how long you've been trading, but if you've been trading for less than 3 years, it's very irrational to beat yourself up too aggressively, because you're trying to master something that is absolutely incredibly technical, and it takes years. You know, there's a lot of stuff that I teach to help you speed the process up. I'm also here every day, well, twice a week here on YouTube, but every day in my private group, putting it on display, answering questions and all that. So just being on this YouTube channel, you know, asking questions, you'll get a lot of that stuff figured out. But just know that you will continuously lose as a trader. You got to get used to it. There's no trader that has ever succeeded that doesn't lose or doesn't have to face up to the losses that they are going to eventually take. Losses have to be a chance to learn. It's a tax on success. It's a payment that you're paying the market to teach you the right and wrong ways to do things. And of course, I always tell you guys, 1 to 2 trades a day is max. That's all you can do. If you're taking more than 1 to 2 trades a day, you are a gambler, especially if you don't have a process. And gamblers don't succeed unless you're a professional gambler, like poker players, but they understand risk management. They understand when it's time to push and when it's time to not push. They understand the odds. So just like them, we have to do that same thing here as traders. But again, you will not go a period of time without at least incurring 1 loss. And if you have a winning streak, you are the most vulnerable. Like what you just mentioned there, you had a good performance the other day. You were probably on a high. So what does that mean? You're in a vulnerable position to be overconfident and disregard your rules. And then once you take a loss, if you're not prepping for this before it happens, expecting the loss, because that's what I do. If I go on a win streak, I'm expecting another loss. So after 5 trades that I win in a row, that's a winning streak for me, I drop my risk by half, expecting the loss to come, because it's inevitable. A loss will come. You know, we're right pretty much most of the time. We always find something that's profitable. That doesn't mean that every entry we take is profitable. I can make a mistake. I could get in too early. I could get in too late. You know, none of us are going to be able to avoid these things because we're human, right? We make mistakes. But the best thing you can do is plan for this stuff by making rules, taking the good advice, setting business hours, never over trading and over leveraging. Because think about this. If you won a good amount of wins yesterday, or maybe you took a good trade that bagged a reasonable size, if you would have went into today with a 1 to 2 trades limit, and depending on if you went on a win streak, if you would have dropped your risk, some people are going to have to drop their risk after a 3rd winning trade. I have a student that every time he takes 2 winning trades in a row, day after, like a 1 win and a 2nd win on the next day, he drops his risk automatically by 25%. So if he risks 1%, he's risking 0.75%, expecting the loss. One of the best things you can do is what I've just described when it comes to longevity in your trading and managing your psychology. You're never gonna fully avoid losing. You're never gonna fully avoid making mistakes. These things get limited over time, okay, as you gain experience. But again, you got to have business rules. Don't be too hard on yourself, but you got to have business rules, business plan. You cannot be off the rails. This is not an industry where we could just, you know, wing it because we feel like doing something. It's a true business. Well, I guess unorthodox type of business, and you're the product. And if you come in over trading and over leveraging, you're being a shitty product. So of course it's not going to be profitable. You know what I mean? Of course it's going to have a lot of ups and downs. And when we're new, we can't avoid it, right? Because we're malleable. You know what I mean? We're very susceptible to the psychological manipulation that happens through price delivery. So again, you got to be prepared for that. Let me see. I want you to start not speaking these things as well. You said, I'm lost. I don't know what to do. I want you to not speak those things into existence, because now what you've done is that experience. Every time you do this, or every time we make a mistake, if we speak this into existence and you know, amplify it, you're pinning that in your subconscious mind about the experience that you're having associated with the marketplace. So what's going to happen? Well, if you do it enough over time, what happens is you cultivate what ICT calls the beaten dog syndrome, right? You know how a dog, when it gets abused by its owner a ton of times, it's expecting a negative thing. So that happens to you as a trader. So you got to be aware of this stuff. It's a psychological war that goes on between our ears when it comes to this industry. Aside from the technicals that could, in some instances, be a little complex, over time they get easier, of course, and I try to make it as simple as possible. But you got to keep these things in mind. I appreciate you sharing that as well. But again, just remember, you got to speak more positively. This goes for all of you. You know, you can't be thinking like, I'm shitty, I'm a horrible trader, I can't do this, I can't do that, I'm never gonna win. Every time you have a bad mistake or make a mistake and you do that, you're solidifying that in your experience. And then now you're building scar tissue, especially if you're trying to go too quick, trying to jump to, you know, profitability too quick with no plan, no real back testing, no real process. Let me see. Like I'm doing this. It depends on price. So I take the trade, don't go. Yeah, no, you need to have a session. You can't just be winging it in any given moment. That's random. Every session has a characteristic. Every session has a personality. So if you don't understand the personality, you're not going to be able to know how to navigate consistently. That's what we're aiming at, right? Consistency. If we don't have a consistent process, consistency in the time we show up, what we're doing, what we're looking for, and how we manage risk in our psychology, it's irrational to even expect consistent results. Consistency first comes from consistency in process and in your mind, you know? We can't be very volatile. You know, we got to be very mellow, calm, and that comes through experience, right? As um, unfortunate as that may sound to some people, a lot of stuff comes from experience. But that's the key when you're able to borrow some of that from someone like me, someone like ICT, right, or anyone else that comes out and proves they know what they're talking about. You get to borrow that proper perspective, that experience, and perspective that you may not get until years down the line. So we're getting a pretty nice continued respect to this. Do got this candle here to watch, so keep your eyes on that. Again, we have a balanced price range here, so if it never even attempts to get down here, it's going to be something that we got to monitor. We do have the close of yesterday down here, so we're going to have a huge sell side inefficient regular trading hours gap. If we were to open up from here, it's a huge discount gap. So my expectation is to see even if we do go higher, I would like to see if we could reach lower a little bit, try to come and fill in some of that gap. If it doesn't and it rips higher, then it may leave it available, and we may be showing early signs that price is not going to really want to come back down to the lows. But we'll see when we go into the open. Also about income, where I'm living, I don't have whether work in the US or EU. Here it's hard to find work or study. Yeah, that's a difficulty right there. It's very difficult. It's very difficult. It's one of the hardest perspectives to learn trading in, is when we're in a situation where our life is tremendously hard, or if we're in debt. When we're expecting to trade, and with that mindset, with that lingering over us, it makes us very, very susceptible to doing reckless things to try to just flail out of the bad scenario. In that situation, as hard as it may be, it's even more important to focus mainly on getting the skill set. Because once you have the skill set and you're able to call the market at a minimum, you're able to attempt to work your way out of that situation. It just takes time, though. The more desperate we are for money, the more unlikely it is for us to succeed in trading. That was a hard lesson for me to realize. It's very hard, because that's what we're here for, right? Is to make money. But you got to, at some point, really nail down the perspective of, I need to master this process. I need to master how to run this business, and the profit will come. Think about it this way too. It's some crazy percentage, like 80-90% of businesses are unprofitable in their first 3 to 5 years as a normal business. This is an untraditional business, and it's, in my opinion, harder than any other business because you're fighting against yourself. So you want to keep these things in mind. These aren't things that sells courses. This isn't, stuff that pumps you up every 5 seconds, but you're going to face it. You might as well have someone telling you how to be prepared for it. A lot of people don't like this. They want me to give them signals and blow smoke up their ass every 5 seconds. And it's like, you're in the wrong place, right? Those of you guys that take this stuff to heart and want to hear this type of stuff, that know the importance of this, or at least feel how this could be the most significant stuff, you guys are going to be the ones that take it serious. And that's why those of you that hop on with me all the time, you've been cultivating a mindset that is not like most people. And you guys are starting to see progress. Even if you're not profitable yet, progress is still progress. See, like I said, we have that big regular trading hours gap. So we're gravitating up, still respecting this balanced price range. So unless we were to break down pretty aggressively, get below this low, we may still see price gravitate higher. We do have SMT at the highs here and equal lows. So, the S&P is range bound right now. So again, the way that price looks right now, intermarket relationship wise, and just overall, and the fact that there's no news, I'm absolutely going to be waiting for the 650 macro. We'll kind of see what happens here. I wouldn't be surprised though if they run up here, take this, change state of delivery on this candle, and then look to wipe out some of this. Just attempt to come back into this regular trading hours gap. It's very logical. We may see this act as a market maker sell model, by the way. We got accumulation, manipulation. We should see distribution. If it is going to continue to go higher, this would be a form of rebalance. And we should not ever reach the midpoint. If it reaches that midpoint, we break this low, my attention goes down to the midpoint right there. We may look to try to reach for that. It's a pretty wild beginning of the session. So I'm really happy finding you live. Yeah, you're just like me, bro. I didn't have any real friends until I started trading, and luckily I stumbled across a lot of people that understood this. Shout out Byron, by the way, in the private group. Yeah, choose the session that you want to trade. Stick to that. Right? Do not try to trade multiple sessions or randomly. If you work and your job gets in the way, then you got to adjust to swing trading and not even think about day trading, at least for now. Mind you, everything we do can be used on the higher time frame. If you guys have been with me for a while, I mean, look how many times we're able to call the market per year. That works out month to month. Look at how many setups run hundreds, if not thousands of points that we frame on the higher time frame. Right, precisely where the turning points are. So you don't have to be a day trader to succeed. All this stuff that I teach outside of the timing elements, because you just basically use the time of the month, so the middle parts of the month, and then you use news events as macros. But all the stuff that we talk about, it's all the same. We use it on the higher time frame too. Yeah, just another perspective that's unpopular, right? Yeah, no, that's a fact. Silent, that's a fact, bro. We all get cooked, charboiled, right? Or like just fried, put in the deep fryer. And then when we're at the lowest of the low, if we haven't been coachable before, you know, we'll be desperately looking to be coachable. And that's what it took for me. And then that's what led me to my mentors outside of ICT. And it made me change a lot of stuff. So yeah, we got low, high, lower, low, stop run, SMT at the highs. So we're gonna keep your attention here real quick. Again, this is happening without a macro. So again, you either have rules or you don't. I have rules that I listen to. So this trade, if it shorts in there, I'm willing to miss it. We're not in the proper timing that I like. I don't like to trade right at 6:30. But I think that it does have a chance to get down into this. We're now below the midpoint. We're now below this low. So it's pretty probable that it's going to run down into this. So keep your attention there. So if it returns back into that, this is also a market maker sell model. That's accumulation. So any return to that low, if it's going to be bearish, should not break the midpoint of this. We just took out previous day's highs. You see that? The last 2 days highs from Sunday, Monday, and also Friday. So Friday's high has been swept, and there's a PD array here. So that's what this response has come off of. This is the significance behind higher time frame levels being met. Watch this being an immediate rebalance. So immediate retracement into that. Let's see if it can form an order block or just simply wick and then just rip to the sell side here. This is now high resistance liquidity to be targeted. It was low resistance. See these equal highs? Now it's high resistance for it to break up there because it's got a stop run now. It's a breaker. If this breaks above the midpoint from this high to that low, this could then be classified as a market maker buy model. But it's going to have to break the midpoint up here for me to get back in the mindset of price going higher. We're in a range at the moment too, so you know that plus price is at 6:30. It's only 5 minutes after. We're not even in a macro, so it's some of the rules are not in alignment. Okay, let me see. Yes. The system. Yeah, if you could send me on Instagram what that system looks like, describe it, and show me examples, we can kind of go from there and give you some pointers. Mentor trade that went from. And here isn't a New York City. So entering sell after this New York sweep, London's high. So I have it bouncing from the 15-minute bullish order block. Where's that 15-minute? Oh, right there you're talking about? Yeah, that makes sense. That makes sense. So yeah, we got that wick right there. That's not very convincing that this is going to keep going lower. But again, I'm going to let it wait. We got an inversion for value gap here. So now if we close outside of that, that's a confirmed inversion from that 3-minute there. We got a rejection block we're trading into here. It's going to have to make a choice here. This is also a bullish breaker. If we get above this high, you can expect that it's going to give another pump higher. But this rejection block, let's watch and see. If it respects that and we break this candle's low, that's going to set up an opportunity. Again, we're range bound, so you got to be cautious. We changed state of delivery here. We got our momentum order block. So we're trapped in between the rejection block and the momentum order block, changing state of delivery. This is a retracement. You see how price is closing below the midpoint of this fair value gap? We didn't close outside of it. That's not a confirmed inversion yet. So it still has a chance to want to punch through the lows one more time. I would like to be more cautious and see it tag this. Maybe give a little wick into that. Treat that as a double change in state of delivery, right? One here, one here. And that's order flow confirmed for me to then seek a little bit deeper sell side. But again, the larger perspective, right? There is a 15-minute, like Emmanuel just said, 15-minute order block. You also have a high, low. Excuse me. I guess I had that double purge right there. We have a high, low, higher high. So that's a breaker right there, that candle. Whoops. So watch this. Remember, on the higher time frame, this is a retracement. So it's a bit risky to try to buy into that because it hasn't fully confirmed that price is going to be bullish yet based on our rules. Right? That rule being the 3 PDA rule. This rejection block, though, is definitely something I'm paying attention to. So it's definitely choppy. Definitely a back and forth type of delivery right now. It's inviting you to blow your account. But yeah, that looks pretty convincing right there. Now we have a double change in state of delivery. We have a fully confirmed inversion right there. So what's the double change in state? Order block, change state, and then another order block, the price gets back above. We should see speed and distance from this level if it's going to start to run. We don't have any fair value gap down there that could be used as a razor model. And we're ahead of the macro. So again, I'm willing to let this go to gather more intel, simply because we're at the area right here that I would like to see. If price is going to be bearish, it's going to prove it by not wanting to break this high, because again, that's high resistance. Remember what I just said? I said that's high resistance. This delivery, this deep retracement, very lethargic interest to get through that high, that is proving that this is high resistance. So what we identified in terms of the liquidity characteristic, high resistance or low resistance, it's coming true. The double change in state may fail if it breaks this low. This then becomes a mitigation block. High, low, failure swing, break below this low. And I would like to see if we get down below that, which it looks like we are. I'd like to see that, if price can trade into that, act as resistance and push us lower. You see the failure? See the rejection block we talked about? See how it's not closing outside of this box that I painted? Now we got a rejection block, so that should send us lower. We're just not inside the macro. If you go to the 5-minute, all of this is a bearish order block, so it's respecting that as well. So now we got that return into it. We should see speed and distance away from this going short. We'll see what happens. We are in a range, so it is lower probability. So I would pay attention to that though. Keep watching that. If this gets above this high, I'll classify this as a type 2 dealing range. Taking this high will put us in line to target this. But again, unless that disrespects this mitigation block, which would be breaking to the midpoint and then taking out this high, my objective's down here for the moment. Again, because of the high risk nature, if any trade was taken, we're outside of the macro. And we also have all those different red flags that we talked about. So my risk would be cut in half. And again, because of my rules, I'm not going to take a trade here. I need to be inside of a macro, at least 645. So let's see what happens. This failure swing in here, that's nice. Because now, well, inside of this failure swing, high, low, failure swing, breakdown below this low, we also have a bearish breaker here. Low, high, lower, low. This failure swing is a larger time frame mitigation block. High, low, failure swing, breakdown. All of this has been anchored in that rejection block. You see that? This is at the highs that are above the last 2 days highs in a higher time frame fair value gap. So now you could see the reaction. This rejection block is anchored in that higher time frame level. Yeah, that's a rejection block too. So we got 2 rejection blocks, one at the lows, one at the highs. You can see the equal bodies. And look at the respect. It wouldn't be respecting these levels if they weren't something important. What is that level classified as? Rejection block. We got another rejection block here if it closes up there. We got one down here. But yeah, you see why I'm waiting? You see my rules, how they protect us? I mean, that offered 20 to 30 points if you would engage that. We have a low, high. If it breaks this low, that's a lower low. That's a breaker. Breaker, once it takes this low. And that low here is also a larger mitigation block. We also have a breaker in here too. Low, high, lower low. We got a rejection block here on this time frame as well. This order block here, this is what ICT calls a propulsion block. An order block that has an order block that closes inside of it, right next to each other. So once we peak below this low, the midpoint of that, it would be the line in the sand for this downside objective. And if it breaks that, it runs the risk of us getting up into these levels. Doesn't look like that's going to happen though, so we're going to stick to the propulsion block. It's a funny name, huh? PP block. We're leaving it. Get over it. Oh, we could just say, let's go with P block. Yeah, we should see speed from here. We're inside the macro now, so we should really drive into the sell side here. Yeah, very sloppy beginning stages. It's totally fine. Again, this is anchored in what on the higher time frame? What's our origin PD array? The fair value gap and the previous 2 days highs. That's liquidity. It swept into it. Plus, we also have that weekly wick midpoint that hit exactly to the tick. We outlined that before anything even took place. We got buy side, sell side. This is a breaker right there. It's also, like I said, a larger time frame propulsion block. It's also a mitigation block. High, low, failure swing, breakdown. So there's lots of things converging in this level. And again, that makes it strong to get down into here, strong likelihood. And if it was to fail, then obviously it would be a strong indication we're probably going to go the other way. Just that move right there that we talked about ran 50 points. The overall objective, me painting and outlining the likelihood of price wanting to go lower more so than bullishness, at least for right now. The reasoning behind why. Hopefully all this stuff makes sense, because that's what's significant, not the fact that I gave you this opportunity here. Again, notice how we're in the macro now, 645, and things look like they're starting to pick up. This is the importance. Would you rather be inside of this pre-macro or inside of something like this that runs to your level? This is the difference. Okay, this is the difference in timing. And this is why timing is so important. It's why the macros are so important. It's why on days that are less probable to have clean price delivery, where there's no news, or it's times that are ahead of news events, okay, like big news events like NFP and FOMC. This is why you want to rely on the macros. And again, if a PD array forms in the macro and it doesn't offer something like this, I mean, this offered a move right inside the macro. So that this is picture perfect in terms of waiting for the right timing and then looking to execute or frame the setup on. If this breaker formed and then it took, another 20 minutes to get out of that range, and then it returns into that breaker, then you could reuse it. Silent, the reason you hesitated was because of what your experience that you just dealt with. That's the reason why. And I'm sure that, amplifying, beating yourself up plays a role. Again, the beaten dog syndrome is real. We all deal with it at first. When we try to rush into things, try to get it too fast, right? Or get overly confident too early, and then the market humbles us. Just know that, that's the risk. It's a constant battle, a constant mental warfare that we got to deal with. And the only way that you can overcome that and win that war, win that battle, is by being your biggest supporter. If your child, hypothetically, was learning to trade from you, think about it. Would you treat your child the way you treat you? If the answer is no, then it's the clearest indication that things have to change. You know what I mean? So I have a kid. When I used to beat myself up like a lunatic, my mentor told me that. And I was pretty heavy at that time when he told me that. But, that's why I try to keep it positive. That's why I never beat myself up. If I make a mistake, I've had to submit to the fact that that's just the way it is. One mistake today is not going to matter a year from now, 3 years from now, if we plan to be here, right? So why are we going to put so much emphasis on it? And of course, it's hard to see that type of perspective when we're in a hard situation. Like I was homeless for 3 years, a pretty reckless family, never knew anybody that learned about investing or even could teach me anything. Was super negative, was getting in trouble when I was younger, was a very angry kid, had a lot of just shit going on. So I had to fix all of that to become the trader that I am today. And all of it's mental. It's all mental conditioning. So you notice how, as price was coming down here, you notice how I didn't mention, let's break this low and then continuously race all the way down. There's a chance for it to come down into here, but we're going into 7 a.m. now. And now we're back in this range. I would not want to touch this if I didn't touch this, which I didn't touch this. I could have. It was right next to the macro. But I let it go. And now with this coming back like this, it's not worth trying to push too aggressively. I'm very curious to see how this is going to treat this run lower. See if it's going to try to aggressively reprice up to here. If it does, if it gets up above here, I'm using this order block here. this bearish order block as an inverted level. So the 1 minute chart, we actually have this for value gap right here. So let me clean this up a little bit. Fix that. So I'd really watch this candle if it can get above that. Of course, if it doesn't get up there, we're not going to buy. It needs to get up here in order for us to buy or even think about it. But we're back inside this range. It's choppy, so it's best to wait. We have a high, low that takes stops. We don't have a higher high quite yet, but if we do get a higher high here, I would not be surprised if they attempt to get up there. But this is choppy in here, so it's best to wait. Now, imagine if you were in a trade right now and you were trying to hold it for hundreds of handles. How would you be feeling? You probably would have got stopped out by now. Look how deep these retracements have been, both to the buy side and sell side. It's coming down almost to the lows with every retracement. It's coming up to the highs almost with every retracement. So we've got an order block here. We have multiple down candles, stutter candle in there. So let's wait and see what it wants to do here. Where is the thing at? So I'm going to remove that. Just shared it in the chats or in the Discord, so we'll have it to refer to later. I'm freaking out because someone can make it and I want to work and be better. I'm trying. Forget about anything is worse. I appreciate the kind words, brother. Yeah, today's kind of hectic, right? The only good reasonable trade setup was that one that I just called, but other than that, we're back to the middle of the range. This is high resistance. We literally talked about when it took this high, if it's going to attempt to get up there, it's going to deliver that in high resistance. So we got a high resistance environment today, at least for now. So let's actually move up a little bit. You know, whenever the lower time frame is hard to read, I mean, look at that. This is a testament to the condition. I'm definitely going to wait till 7 a.m. We're in the macro right now, but I'm going to wait till the silver bullet window. Yeah, we got a rejection block here too. All right, we talked about that rejection block. There was another one that was a little deeper on the lower time frames, but that right there is a rejection block. And look at how it's beautifully being closed below. Look at this wick midpoint being respected. That's bearish. Right? It's showing you at the moment, characteristic wise, candle to candle, that it's supporting bearishness for the moment. You know, that could easily change because, again, we're not even in the silver bullet yet, and it's consolidation. We've taken buy side and sell side. The range right now, the profile for the day is seek and destroy. We have the open price here for the day. We had a daily wick that shot lower, or just like, you know, price ended up getting below that. The actual daily open is a little bit further lower for like the trading view anchor point for the actual open. We have an unorthodox open price reference because ICT stuff is unorthodox. But anyways, if it's going to be bearish, we want to see the best shorts come from above. So we basically took out previous day's highs and we hit a daily fair value gap and a lower portion of the wick. And now we're respecting this. So it's really confirming bearishness is still underway. So I'm going to keep my focus there. This is a propulsion block. Remember I just told you guys? Order block with an order block that closes inside. Midpoint should be respected. We should not break that. So we do still got dollar racing towards the breaker up there. Still going lower, right? Remember I said until we get up here, it's not going to be bullish. It's all still bearish. So now once we break this low here, let's go see, is that an order block? Yeah, we got an order block there. So I'd be watching that. So we got our first layer of liquidity that was swept. Second layer could be down here. And that right there will get us into an opposing PD array, being a bullish order block. Okay. So if we're going to have a bearish week, this is ideally what you want to see, right? Accumulation, manipulation, set the high of the week, market maker sell model to target these equal lows. That would be beautiful, wouldn't it? And it would use the regular trading hours gap midpoint as a draw. But it's definitely a more tricky day. So if you're not comfortable, you got to really reason with yourself, right? Got to reason with yourself. You cannot be worried or fearful of a loss. If you choose to engage in something like this that you see is a bit chaotic and you take a loss, you got to just get over it because you are already in a condition that's a little harder to trade. I mean, it's clear. It started out as seek and destroy. It's very high resistance. Okay. So you just got to accept it. This should be speedy from here if it's going to try to target this low. Ideally, if we want to see this as a good opportunity, we need to see that thing start to loosen up from this level. We have a large wick displacement. That fair value gap should not be traded to the upper part. We have buy side, sell side. That should be a small balanced price range. We have this low to that high. We're now below that. We should respect the lower 25% of that range if it's going to be bearish, right? So we're about to go into the 7 a.m. time. Again, I'm going to let this go. If it goes lower, great. But I'm going to let this go because 7 a.m. has a very strong repetitive reversal nature. At least, you know, small retracement or small reversal. There's a 7 a.m. reversal profile that people look at, that some people have a model around. It's a very common thing. I have a student that's actually engaging with that model. Shout out Sean. So yeah, let's watch this fair value gap. I already don't like that we filled in the entire fair value gap. This wick with displacement, I already don't like that. Just a testament to the high resistance nature. When it's high resistance, it's going to be very difficult to find fair value gaps that don't get filled much more than we normally like. Notice how we're going into 7 a.m. and it's already starting to somewhat tip to the upside. Watch this fair value gap here. Again, hopefully you guys have burned this higher time frame idea in your head so we can now move lower. Again, we got that balanced price range. It's going to still respect that. If it's going to still respect that, we're going to see price go up. And again, if we break above this level up here, sells are not favorable. We now have a bullish breaker formed. So now that we're above this, we got to watch the retracement into this. If it retraces, respects that, creates a bullish order block, and then trades through it, that would be something I'm going to go off of to try to seek a little bit higher prices here. So real time, we're navigating what price is doing that leads us to particular objectives, particular perspectives. So I'm not going to just buy this because it has an acceleration here. The time element, notice how I said the 7 a.m. a lot of times has a reversal profile or characteristic or a deep retracement. Look at what's happened right at 7 a.m. So watch this here as a breaker. Watch this as an inversion fair value gap, the first one. I mean, you have a couple other ones in here, but I'm going to use the bigger one. So if we can stay above the midpoint of this, if we could set an order block, a bullish order block, and then it trades through that, I'll look at this as a double change in state of delivery, and that'll confirm my interest to target the buy side. And then we'll see if we can catch continuation going up there. So far, though, we've only called this short, targeting this low. That has worked out. Now we're observing this breaker because we've got this rejection. I just don't like that the dollar's going higher. It's kind of being a little bit of a problem. We do still have this balanced price range down here that respects this. I'd say that if this fair value gap gets broken through to the downside, that will pique my interest to want to go short a little bit further, and it'll turn off my buy interest. But we're monitoring this now. We're waiting, right? We have an order block that formed. It's trading into the bullish breaker. So if we can get displacement through this, I'd be confident that we're going to target this up here. Preferably, right, if we were going to go with what the higher time frame showing us, I'd prefer to see this go lower, because again, this is all inside of that bearish overall perspective from that daily chart. So I'd prefer to see us go short, but we're not going to force things in the market just because we want something to happen. If price action is telling us something different, we have to be able to adjust. Ideally, though, like if you're looking at this time frame, but it was like a 5-minute chart, we'd be thinking this is a retracement to go lower. So that's what I would prefer to see. But if price was to break this level, like I mentioned, which it's not doing now, that'd be the only time I would have looked to try to consider a buy position. Now we are breaking through this. So now my interest is pretty solid to see if we could utilize this as a bearish breaker here too. Got an inversion. We respected the lower part of the first presented fair value gap. So now here, actually, let's use this. So now we got a bearish breaker. So return into that. My objective in this case is this low. And we also have the midpoint right there. So yeah, it's very, very choppy, very, very gross price delivery. So none of this is super high probability, right? Very, very high resistance, low probability conditions. So yeah, we do got this wick. If we can get displacement, that really amplifies my interest for this level to be targeted. And again, this is all inefficient to the sell side, so it makes sense. We've had lots of justification that this is going to keep going lower. The levels that we wanted to utilize to confirm buys have not fully manifested. This green box up here, I wanted to see it get above that. I wanted to see an order block form and then get traded through in order to be bullish. It hasn't offered that, so it's been all bearish because of the higher time frame perspective. Right, it just took a little while to really solidify. But that's what happens when you see this type of condition. You're either going to go in there, wing it, and blow your account, and then find out, or you're going to be calm. Right? You're going to be calm, and you're going to observe things. So yeah, we've now set equal lows here. Unless this high is taken, I'm still going to be looking to go lower. Got these assets kind of going against that. It may turn around. Holy crap. We got the other indices. Yeah, I don't trust the shorts here. I don't trust it really. Clearly the Nasdaq is doing whatever it wants. I don't trust it, but I still believe, given what Nasdaq is showing, that it's going to try to reach for these lower levels. Oh, maybe the other ones kick back in line. Again, you look at this 1-minute chart, but then you look at the 16-hour chart or the daily chart. It looks a lot less convincing that it's going to keep going higher more long term. This is why you want to be married to that higher time frame. But there's really nothing wrong with this idea here. Right? I said that getting below that, may you utilize this to go short. This offered at least 20 to 30 points right there. If you were to use this as a bearish breaker and chose to engage that, that offered 34 points. It's not bad. In this environment, that's all I'm looking for. When it's high resistance, my only expectation for those that are new to the channel, my main baseline is 20 to 30 points. Nowadays, this year, my baseline has been 40 to 60 points, right? But for you as a new trader, especially in this type of condition, my encouragement for you is to use 20 to 30 points, 1-to-1 risk to reward. And again, I'm not promoting you to trade live. I'm not a financial advisor and I can't do that, but you know, it's just my opinion, right? You got to work your way to those bigger targets. You have to understand the higher time frame more than you really have to when you're just looking for 20 to 30 points. Especially if you're trying to catch hundreds of handles, that only comes from larger framework. It doesn't come from what the 1 minute tells you. Because you're part of a bigger move. You see how the dollar's kind of turning a little bit? The dollar is inside of that fair value gap here. If we can't close outside of that, that turns to an inversion, right? Once it breaks above it, that helps support the idea of going higher. But if we can't get that, and this thing starts to turn and say we break this low, you know, it may cause a little bit of issues. We're still gravitating lower. We still haven't triggered in my interest to go through to the buy side yet. Again, I talked about this. It needs to get above that in order for me to think buys. I'm not going to buy down here in this low. We still got some lower targets. I know that the other assets are kind of ramping up a little bit. But when you look at this 4-hour chart, it just looks like a retracement. We're still inside of a bearish PD array, just like this one is, just like this is, right? We actually have bearish SMT at the highs too. S&P is the weaker of the three. Nasdaq is the strength holder, but it's pretty much the weakest or most bearish at the moment. We're coming back into this balanced price range here. So again, highly risky. We've been correct up to this point, seeing price go lower, taking out both of the targets. I gave one trade setup. You know, you could have tried to engage something in here, using that as the breaker to go lower on this candle. Maybe you would have got wicked out here. Again, it's just super high resistance. So for me, the best idea would have been this one that I called out earlier. I mean, that would have went above 50 points, 60 points, right inside the macro. So we have this as a breaker here. That is a breaker. Just use that whole candle. And now it's looking like it wants to amplify. So again, my real interest is down here. I want to see if we can get down there. This red box is an inversion fair value gap, I believe, from the 4-hour chart. So if we are going to go higher, if this is going to turn and go higher, it's going to have to do it from this level. And again, if you take the high here to the low, it's also in the upper 25%. So this retracement, it's going to have to respect this level if bullishness is going to unfold. It's going to have to react from here, break this high, use this as a bullish breaker, and that would be the only time I'd look to buy. Otherwise, it's only been shorts. I have really no interest in anything else, at least for right now. Maybe that changes later on, but with what price is doing right now, you know, price is telling you something you got to pay attention to, and it's saying that it's not bullish at the moment. I know some people are talking about it being bullish, talking about aiming for these highs and whatnot. Well, we're not there yet. You know, that assumption is fine, but if that's what we were using as our opinion, we would have lost trying to force a buy. So yeah, so that breaker's offering pretty nicely there. I'll look at this for me personally as a missed opportunity. I definitely could have taken that. I just don't like what a lot of this stuff is doing. Dollar's declining. The intermarket relationships are a bit skewed. Very choppy start to the session. So it's just something that I'd rather have pause on. Again, I did call out that setup. We did talk about this being a breaker. So if you utilize that perspective and you like the breaker, right, offered an opportunity there as well. We did talk about and narrate and outline all this movement and what caused me to believe that it's more likely to go short. So that's the biggest takeaway from the call so far, as it is for most of the calls. Understanding my perspective and the things that lead me to making a particular decision on what price is going to do. And then, of course, identifying the levels that could be reasonably seen as an opportunity. You could have also used this as well. It's a little bit risky in there to try to take a short in there, but that's an inversion for value gap if it would have gotten above it. You see how the body's closed below the midpoint? Once you get a change in state of delivery here and a lack of confirmation where this is not holding price to go higher, this candle provides evidence that we're probably going to go lower. Change in state of delivery. For value gap being respected, we got a bearish breaker here, low, high, lower, low. We have the upper 25% of the regular trading hours gap. We're pulling down into that regular trading hours gap, which is a piece of the narrative that I told you to focus on. I said there's a huge gap to start the session. And right when it opened, it's a massive gap. I said the likelihood, even if we are going to go higher, is at the start of the session, we may look to go lower into that. Right? And then, kind of depends on how we treat this lower 50% level. If this can't get down to that lower 50% level, right? Remember, I literally just talked about this level here. So that 4-hour inversion, if we are going to go higher, it's going to have to hold in this level. If it does hold here and we start to rip aggressively through to the buy side, all of this will have been accumulation. Look, you notice where the open price is for the day? They love to do this, right? They'll pull it aggressively into that open price. And if they're bullish, especially when it lines up like this with the PD array, I'm not going to assume this, but many times this is a common characteristic. When the open price is there and we're up here, if it's bullish, they like to pull it down early in the session to induce you to go short, really get away from the buy positions. They tap it right below. Look how perfect. They just spent a little bit of time down there. So if this ends up breaking this high here, this candle becomes a bullish breaker. And if that becomes a bullish breaker, we have the low of the day potentially set up right there. And then that refusal, right, to get down below that, it's going to show that we respected this upper 25% of that previous balanced price range. And that right there would set us up with something that could potentially be used to run higher. You also have an inversion here. So that inversion for value gap is interesting. Oops. So yeah, we do got a bearish breaker. We also now may potentially have a bullish breaker. So we got to wait. I got to wait personally, because there's an argument to see if price can get down here. What may stop that, again, is this inversion for value gap holding in price, and the fact that we just simply tagged below the open, and now we're aggressively repricing higher. If they're going to go up, they slowly dragged you lower. So they grinded the crap out of you. And now if they're going to go higher, a lot of times they rip it aggressively to make it so you can't get in. And you're too scared, or you blew your account before the move could actually unfold, right? So we needed to get up above this candle here, above this level, in order for us to really consider and put buys on the table. Otherwise, it's just going to keep grinding, see? So the buys did not engage yet. So the opportunity to take a buy did not turn on. And now we're aggressively repricing lower. Now we got an inversion here. This breaker now inverts. So it should be used as resistance. So very tricky environment right here. I'm unwilling to touch this. But again, this is supported by that higher time frame fair value gap, higher time frame retracement to go bearish. And if you zoom out, it's also a market maker sell model. We could fully confirm this as a market maker sell model once this level here gets violated. So again, this is a very good example of a day. So it's not the low of the day anymore. It doesn't have a likelihood to do that anymore because we gave it up. But this is a beautiful example of a day where you got to have rules. You can get beat up in here. This is deep retracement, high resistance, deep waters. Okay. So enter your first gap. Just took over. Beautiful. So you took a short, Jen. Nice. Okay, do you guys have any questions? Maddie, yeah, we talked about the previous day's high being taken in the SMT. But yeah, it's all high resistance in here. This run higher, if we break down below this low or below this open right here, that becomes a bearish order block. We have a high, low, failure swing. This down candle is now a mitigation block as well. So let's actually get away from that old breaker that was about to be set up. So we're starting to really dig into this balanced price range here. You know, if you were not very confident in this, and this is hard for you to trade, you could really wait till this gets all the way down below this fair value gap, inverts that, and then you can use that as resistance to then frame a setup on from this 4-hour perspective. Just wait till it gets down into that. If you do want to short, right? And you want to get some of the easiest looking conditions, right? Once you overlap this, that puts this in jeopardy. Very, very easy target. So not many people are willing to wait though, which is kind of unfortunate, but you got to wait. You know, like this run up here, run up into the highs up here, that reaction off of that, this breaker that's set up. Again, we called that short in there. It's hard to hold in a position like this, right? And if you didn't take an execution in there, you know, it's nothing to beat yourself up about. So yeah, we've actually rejected that. We seem to have accumulated orders down there again. Now we're flying. So I'm back in the perspective of this being a bullish breaker. This is a type 2 dealing range, low, high failure swing. And now it looks like they're going to just fly through this high resistance. They're not trying to give you a chance to get in. This is what I was concerned about with this 4-hour and the open price. So the low of the day annotation did get taken off a little too early. So I still believe now with this failure swing that this could absolutely be a candidate for the low of the day. It didn't break through it. That aggressive repricing there makes me real confident that they're going to want to run it up to the buy side. So we got that fair value gap in there. I think they're not going to need to give some deep retracement. See what happens here. Now maybe they look to come down one more time. But knowing what I know about how high resistance generally transpires, right? If we are going to see this go up, it's going to be very quick because all that was high resistance. And if this is a deep retracement, which it could be, that ends up going lower and overtakes this fair value gap, that'll be the moment I would look to try to take one more attempt to go short. Otherwise, this is going to fly through this buy side right here. So we got to see it get above that first presented fair value gap right there. Otherwise, it's in jeopardy of just rejecting that. It's a pretty solid rejection here on this time frame from that inversion fair value gap. So this is the anchor PD array for this potentially to go up. But we're trapped in between two higher time frame levels, this inversion and this fair value gap up there as well. So a very, very tricky environment. Definitely not something to gunsling in. See how this thing operates. If we can get above this order block, that'd be a very strong indication we're going to go up. Yeah, it looks like they're just trying to smash everybody. It's just one of those days. Yeah, what a manipulated move right there, huh? Sheesh. What are the other indices doing? This looks like they're all, except the Dow, looking a bit sketch. Got that rejection block there. It's going to have to get up above that. If it trades beyond that, that's a change in state. And then we could see that potentially get up here. Again, this is high resistance to trade up into that. So yeah, this low needs to stay intact if it's going to be interesting to go higher. If it takes this low out, it's going to give another leg lower. So we'll see what happens. Yeah, nothing I'm really interested in here. If we can get up above that, that'd be a pretty solid area that would pique my interest, or if it takes this out. But for now, I'm not willing to put real money behind something like this. It's gross. Okay, got an inversion in there. It's gonna have to get above that. We got to get back outside of this if it's going to have any life to go higher. So if we take this out, that triggers the sell. This right here gives us a likelihood of it being a buy. So that's like invalidation for this framework in here, this little setup, but we're back in the middle of the range. So it's 50-50 at this point. It's just stuck inside that range. But if we have a gun to our head, it's best to use that higher time frame objective. So the higher time frame is promoting that it could go lower. And we haven't quite gotten out the woods yet when it comes to that. But that wick is really something. Holy crap. Look at that. It's showing respect to this balanced price range for now. Like everybody from overnight got wiped out. So did these people from yesterday. So it's definitely accumulated a lot of orders in this level. This level's at a bearish, higher time frame PD array, being the 4-hour fair value gap, or the daily fair value gap. We'll see what happens. It's having a real hard time getting through that first presented fair value gap that we outlined right here. It has to get up beyond that if it's going to be trustworthy to buy at all. If it gets above this high, this is a market maker buy model. And this candle here should be our accumulation turn distribution. So it should fly from that level. So yeah, once we get outside of this, we now have double change in state of delivery. Now we got market maker buy model framework. So it's a little bit more confident, especially with this wick, for us to now aim for this more so than the consideration of a short idea. Very tricky environment. You should not be expecting from yourself to be exceedingly confident and demand a winning trade in this environment. Without experience navigating these waters, it's highly likely that you're going to miss a setup. It's highly likely that you're going to lose a trade. Yeah, this down here was a really, really good idea. And if we're being honest, whoops. We're being honest, ended up watching that rejection block on this candle, ended up taking it up a little bit beyond the midpoint there. But this is me. I'm not shouting out more risky trade setups to you. So I gave you guys the safer bet, getting up above that breaker. It's a quick, was it 73, 70, 71. So 69 points, not bad. And what was the anchor idea that I used from this? The rejection block we talked about earlier. Again, this is AMP live account. It's not a fake account. But that rejection block is pretty beautiful. So we got that rejection block in here. Price comes up, starts to blow past. I like the rejection block with a rejection block. Anchoring at the 4 hour, sending price through to the buy side. So this is somewhat of a turtle soup type of perspective. Stop run, we had dollar kind of declining aggressively. And then this just fully confirms everything. If I wouldn't have taken that trade right there, I would have taken a trade, right up in here when it comes down into it. Stop would have went below this breaker. So instead of what I just showed you, stop would have looked like that. So 35 points. Aiming for the buy side delivery. So you could have entered in there right when it comes back to the breaker. You could have honestly used the fair value gap in there once this black candle. You want to buy when price is going lower. I almost bought in this, but it's too risky. It was just way too risky for me to do that. So I demanded the response to prove it. And then price proved itself. Right on this candle, we had a rejection. Respect to the wicks, I was monitoring these wicks in here. I love to study the reaction that one candle that presents a wick has within the next candle's open and the wick. If it closes a candle above that midpoint and you're at a logical level like this, and we're in that upper 50, upper 25%, and you're bullish, or there's a chance for it to be bullish, it's very, very likely that you're going to get some type of little push like this because it's anchored in a deeper understanding, right? But if I wouldn't have taken this more aggressive trade setup, which honestly I broke my rules to take, I don't know why I just saw it and was confident in it. So I just pulled the trigger. But you have the flexibility to do that when you've done this for so long and you have rules, and I don't really give a shit if I would have taken a loss, if it would have taken me out. Wouldn't have mattered. I wouldn't have really cared. We are on every single day, finding things every day. If I don't make something today, I'll make it tomorrow. If I lose today, I'll win tomorrow. And I mean, it's just through time and experience, we've proven that, not only as a community, but also me personally. I proved it to myself. And that's what really matters. You proving it to yourself in terms of your skill set. But I outlined this breaker for you. So that breaker right there, if you would have waited till it went down into that, you could have entered that. Stop goes below the breaker candle. You would have had a small little bit of drawdown. But again, we called that out. We talked about that being a breaker. It was 50-50 when it was up in this, kind of stalled at equilibrium. More so seemed like it was trying to get up to the buy side. And And we fully get that confirmed once we get that double change in state right here. Right, so one change in state was there. Once this gets above that, so if you wanted to wait and be even more conservative, you know, this breaker holding and then displacing through this, you know, that wick, right? Or just simply when price trades through that, if you anticipated price continuing to get up there because of the respect down here, you could have used that. But, you know, realistically, maybe that's not something a lot of you guys would have been able to enter. Well, on this displacement, if you catch this wick going down into that, okay, that wick right here, trading into this wick, that's a good setup. Stop goes simply below the candle that created the fair value gap. Or if you want to be extra conservative, put it below the rejection block right there. This created a rejection block too. So it's just another thing that helps confirm that this was in fact going to continue to deliver. And then once you got above this bullish order block, look at the bodies and the wicks of the candles. Can you guys see the wicks? Sometimes I know it's blurry to see the wicks. Let me know in the chat if you could see the wicks. Let me know in the chat if you guys could see these wicks right here. Again, if you guys have been getting value, don't forget to like the video, subscribe to the channel. Could see the wicks? Okay, good. So once you get that change in state of delivery there, the breaker is one change in state. You also have a fair value gap here, overlaps the fair value gap, but then we trade through it again. That's a balanced price range. So if you take the high extreme to the low extreme, get equilibrium, price should not come down into that. What happens when it tries? It comes down to the breaker above the upper 50%, above this as a balanced price range. Look at how beautifully the bodies of that candle, of these candles, respected this range as a balanced price range. Look at how beautiful that is. It's also part of this fair value gap too. Just look at that. And then you got rejection block that forms there. That's a strong signal. That's something you could enter on. It's in a breaker, and you also have a rejection block being formed. If you get a rejection block, this is a gem. You better write this down. It's unfortunate that 81 people joined and they hopped off. They're going to get gems like this. They're tucked away. If you get a PD array that you're anticipating price to trade away from, if you can identify a rejection block that forms, that is a powerful confirmation that that level is going to hold. If you can get a rejection block plus SMT as well, maybe at like these lows or something, or like if it has a low here, higher low, and then the other time frame has a failure swing or like a lower low, right? So SMT at this turning point, plus a rejection block that forms at that level, and you see displacement, that is a strong indication that price is going to continue to drop. It's going to continue to go in your direction. Go and back test what I just said. This is what a rejection block looks like for those that don't know. Okay, rejection block, rejection block, rejection block, rejection block that fails. Okay, breaks through it. It's kind of uneven, but you know, it's just a small discrepancy. Notice what it does right when it tags it, hits it, wicks off of it. It's a rejection block. It's engaging the rejection block. Okay, so whenever you have a PD array, if it's a breaker, if it's an order block, a fair value gap, or whatever, look at the fair value gap. Even if you didn't see the breaker over here, you got this fair value gap. We then have a rejection block that pushes away, that's formed inside the range of the fair value gap. When the rejection block forms, it's like a line in the sand. If it wicks lower, it should be able to stop right there if it's correct. If it violates it, it's going to be a problem and it'll go the other way. So which is why when price immediately trades through an opposing wick, it's a powerful indication of direction. and immediate lack of respect. Are you talking about the rejection block that forms? Which is why when price immediately trades through an opposing wick, it's a powerful indication of rejection. I want to answer that question, Maddie. I'm trying to piece together what it's referring to. Okay, so yeah, it's talking about the rejection block, like as it's forming. Talking about like this wick, if it was to like immediately break through it, that'd be an indication of failure. Is that kind of what you're leaning at? And then when it holds it and then creates the rejection block, it's helping support the price is going to hold that level. Is that the perspective? Yeah, okay. I totally agree. That's 100% true. It's again, it's another example of a PD array having depth. An order block is not just a last up candle or a last down candle. A rejection block isn't just two equal bodies in a candle that rejects. There's a delivery that is a part of each PD array and rules that indicate certain things or another. And every PD array can be broken down in a much deeper way. But pattern-wise, and just overall in this scenario-wise, hopefully what I just talked about makes sense. What Maddie just referred to as well is on point. But that's why this rejection block, when it forms in a PD array, is so powerful. Because if that's a wick, you also have multiple things going for you, right? If a bearish candle forms and then a bullish candle immediately after has an equal body, and that wick that forms does not get traded into through the 50%, that's a super powerful confirmation when you deliver price higher. This is also my momentum order block. One of the variations of an order block. If you have an order block that gets completely overtaken, when price trades back into it, preferably the bodies of that next couple candles respects the upper wick. You cannot see price break through on a closing basis the upper 25% of that when this forms. If you don't like the rejection block idea, you could use this, because that's a solid confirmation that price is going to continue. I should have held this trade a little bit longer than I did. Should have held it more. I just took it right up into this. I wasn't 100% sure if this first presented for value gap was going to hold, and then we got that rejection. So I kind of was glad that I took profit there. But outside of that, we had the breaker, like I said. So think about the ideas that we called out. Called out this short here. It went beautifully, about 60 points. Talked about that right before the macro, kind of like next to the macro, looking for this liquidity and then eventually this liquidity. You would have got shaken out here if you would have held it, trying to get down into that deeper level. Nonetheless, 60 points. All we're looking for is 30 or 20 to 30 points. Those of you that are new, you're looking for 20 to 30 points. But we called out this, that went well over 20 to 30 points. Okay. That's your starting baseline. But we talked about this and everything that led up to that. All of this, right? We mentioned all this stuff. And another thing that we mentioned, well, I personally took this. It was more risky, so I didn't even really mention it to you guys. But you saw the execution. And I explained why. Outside of that, if I didn't take that, right? Well, I didn't mention it, so for you guys, that wasn't present. What we did mention was this sell-off and then this breaker here. I talked about that breaker. I said, if it gets above that, that may be utilized to push price through the upside. It was a little risky because that was a pretty deep retracement. But nonetheless, this thing offered price all the way up to, wow, the rejection block that we talked about earlier. It's a clear draw on liquidity that was used. And I mean, you could have just held it up to the upper part of this fair value gap. But once it blows through a level like this, what's the point in just closing it entirely? You could close most of it right there. If you have like partials, You could take partials right there and then just let it run a little bit. We talked about the 7 a.m. reversal phenomenon. That's one of the reasons why this entry here that I showed you guys a second ago, it's another reason why I took that. I trust the 7 a.m. reversal, especially when it's coupled with early on, first 30 minutes, prices declining, especially in high resistance. I know that a lot of times when they have this high resistance and we have a level that gives you a probability of reversal, like a 4-hour fair value gap or something like this. So that's an inversion plus this. And it's also the wick and the upper 25% of this as a balanced price range. So all of that converges with the 7 a.m. So time, 7 a.m., reversal, and price being these PD arrays. You know, again, we do have the higher time frame fair value gap that we were watching for bearishness, but it hasn't really given too much of an aggressive response. This is a very sloppy, choppy response to a higher time frame level. So it makes it less interesting, at least for a little while. And it was very choppy. So again, it's not something I would have wanted to participate in. This was pretty nice. So maybe you could have looked at that as well. But again, that's at 6:30. So it's outside the rules. Okay, but time being 7 a.m. and the macro, letting that first 30 minutes unfold if it was choppy. And then price being this inversion, we got a fair value gap and we got a balanced price range. If it was going to be bearish and this return to this gap up here was in fact going to send price lower, we would have seen this dynamic move continuously smash. And it kind of did, right? But it was very high resistance. And then we simply got back down below the open. We had lots of rejection. It failed to close below it. We got displacement. We took out this high, or the open price right there. Price came down, hit the rejection block, tagged this one more time. And then price closes like this using the wicks like I talked about. So wick midpoint respected, showing respect to the open price, showing respect to the 4-hour inversion, showing respect to this fair value gap, showing respect to the upper 25%. We didn't just smash through it. If it smashed through it aggressively and then we overlapped this inversion, my objective would have been the midpoint here and then this fair value gap, the low of the fair value gap. But it didn't do that, right? So right here, we got displacement. We have a bullish breaker. So all of this is a balanced price range. We had an inversion fair value gap that formed here, and then it overlapped it one more time. So it kind of reclaimed it. That's a balanced price range in there. And look at how beautifully it stopped right inside the breaker with all this other context that I laid out a second ago. Okay, leading to the 7 a.m. reversal. And then, now we got a breaker here too. So high, low, higher, high. If you get a return into that, that's also going to be the 2022 model. Stop run, shift in market structure. If you can simply get a wick into this, we have relative equal highs up here. This now went from high resistance because it's a stop run to deferred liquidity setting up low resistance. Those of you in my private group hopefully recognize the deferred liquidity logic. It's a market maker buy model. This is second stage distribution. We should fly. And ironically, we're now inside of a macro, 745. So we should get that punch through this high. And again, time and price. Rejection block was used for the reversal. Rejected. We got a change in state of delivery, shift in market structure. It just didn't offer you the 2022 model in there. Right? It would have offered it, but it would have been a missed opportunity that, well, not a missed opportunity, it just didn't offer it. But nonetheless, first presented fair value gap, look at the body closures up to the midpoint. Now, if this would have dropped, came up, hit that, and then broke down through that and closed below this first presented fair value gap, I would have looked at this as a market maker sell model and a failed buy model because this high didn't take this high. Notice how what I just said too about low resistance, how this high went from stop run high resistance to engineered low resistance, shifting away from the high resistance characteristic because it set a failure swing here when it hit reversal. And then once it started to run higher, changing state of delivery again, that puts you in position to take something like this. You could have tried to be aggressive, put an entry here, put your stop below that fair value gap, and depending on how big that range is, oh yeah. In this instance, given this scenario, there's nothing really wrong with that. You don't necessarily need it to go down there. There's a lot of stuff riding on the fact that this is going to go up through this high with the deferred liquidity. The only thing that doesn't really support it is what the dollar's doing. So intermarket relationships are a little off. It's a little bit risky today, okay? But there's ways to get in, and some may be outside the scope of what you know, and there's nothing wrong with that. Spending time here, you're going to be exposed to a lot. So just give it 3 to 6 months of you constantly showing up to these calls. And if you're in my private group, just after a month to 3 months, you'll see a lot of progress. That's for sure. Doesn't mean guaranteed profitability, because that takes time. But you will be a lot more organized. And again, you get very, very solid benefits just from being here, supporting the channel. And again, if you guys have gotten value today, if you do enjoy what it is that we talk about, and you feel that you've been learning, don't forget to like the video, subscribe to the channel, share it with a friend. If you have anyone that trades that you think could benefit from a community like this, I like the word of mouth. I like having everybody knowing each other. Just makes it more tight knit. But if you guys feel inclined to do that because you get value, I would really appreciate it. Shout out some of my students who have been doing that recently. It's much appreciated. I'm glad you have been getting value. And it's been fun to see you guys grow. And it's going to continue to be fun to see y'all grow. This right here, getting back to price, this is also a bullish breaker. You now got your 2022 model offered. So it did, in fact, come back down, offer the 2022 model. And then it offered another 50 points above these highs. The only way that this stop run here, it's going higher, right? The only way that I would have considered this as a short is if we would have rejected from this high, because again, we are still inside that higher time frame fair value gap, higher time frame midpoint of the wick. But the only way that I would have justified that is if we were to break down below this low. If this sweep above this high breaks this low, I now have a breaker. Low, high, lower, low. And in that case, this becomes high resistance again. So I may have a hard time getting back up there. And we'll have the higher time frame justification if this was to be violated for us to then go lower. And we would have dollar going higher. That would support that idea. But that's the only way, right? You got to let price come to you. And this is what that looks like. Just because it's going higher doesn't mean you have a setup. Just because it's going lower doesn't mean you have a setup. You gotta understand what's happening in price. What is it communicating to you? Hopefully you guys are seeing that you're learning a lot about that, being here. Do you think those swing highs are low resistance for a buy? So this high up here, when it was just this high, that was not low resistance. Once it gets up here, obviously it flew through that. Right? We talked about some of the stuff that led to that. But it was trading into high resistance because this is a stop run. Once it does this, goes from a stop run, high resistance liquidity, runs up into that high resistance, almost about to break it, but it sets a high and then reverses, generally targeting short-term lows. When it does that, if this proves that it wants to change state of delivery again, we now have low resistance and it should fly through that, as you see here. And we're now kind of stalling a little bit because, again, we still got to remember that we're inside of a bearish higher time frame daily PD array up here. So it may have somewhat of a hard time getting through that, right? At least on these lower time frames. On the higher time frame, doesn't look like it's had too much of a problem. But on a lower time frame, how it's printed this, right, it's been kind of challenging. But I literally called 2 trade setups, 3 trade setups. I called one in here to go short. I called this one to go short. And I called this one for you guys at the breaker to then anticipate price potentially going higher, right? I told you the risk. I said it's 50-50. right? When it was in this level in here, because it could, right? It could go lower and it could go higher. We're at equilibrium, we're in a range, right? We're in a higher time frame level here, but we're also in a higher time frame level here. Balanced price range below, daily fair value gap above, and we were sandwiched in between. And so what did that lead to? It led to this. Does that mean you can't take trades? No, right? You could still navigate short-term liquidity like we did. This one here, and then all the way down to this one here, using this as a breaker. Talked about that first presented fair value gap. That thing played a role for both shorts and then eventually buys. This was very, very high probability, aside from the low probability that we dealt with. But yeah, and one thing that goes against this being an easy read here to see this go higher would be the dollar. But things have been cracked in correlation pretty significantly. Let's look at gold real quick. Gold, we got a change in state of delivery. So in order for this to be bullish, it's going to have to come back down into this and respect it or fly through this gap. I think we're going to reach for that gap though. For those of you that trade gold. Okay, I missed that. I missed that bullish SMT right there. I was kind of just looking at this. I was looking at that. I didn't look deep enough into that. That's a bullish SMT right there. Got those equal lows. Pretty interesting how they left that. We're above this for the S&P, by the way. If you trade S&P, that right there is a distribution level. Accumulation turned to distribution. This is high resistance. So trading into that high resistance, you may get a retracement and not a straight shot. If this is a low resistance level, like a failure swing, many times you'll get the straight shot, right? Very, very low resistance. But when it's failures, it's not a failure swing, but when it's a higher high like this, it's a stop run. It's not like an open liquidity pool where it's got a failure swing. Many times it's going to have to shoot up there and then engineer a failure swing. Then from that point on, when it retraces to a logical level, maybe a news event's required as well, it could send it up through that from this higher time frame. But again, that's high resistance. This is a rejection block. We went right into it. Got this wick right there. Let's take a look at some of this stuff. Again, you see how the wick right here was respected? We mapped out this high to that low again as a BPR. I said if it stays in that upper 25%, it's pretty much what I was anticipating going into 7 a.m. because of how slow it was. It's very, very slow. And we had the 25%. Wow, that's a crazy confluence right there. Upper 25%. Was so close to that open price. You see how we went intentionally right down to the open price? That open price was coupled with a higher time frame PD array, both being the inversion on the 4-hour, being the regular 4-hour fair value gap, and the upper 25% of this range, which again is buy side, sell side. We have stops taken, and then we got displacement, changing state of delivery here. So once price gets up in this deeper level, or if we get above it like it did here, when it comes back down, that should act as a balanced price range. We have buy side, sell side, buy side again. And all of this is happening from a monthly fair value gap that we outlined. You see how everything kind of comes together? It all kind of glues together. It's attached when it comes to narrative. It's not just like what I think the lower time frames are going to do. Everything justifies everything, right? Higher time frame to lower time frame. It's a depth of understanding. It's not just one concept leads to the other, right? We have a list of things that we use. higher time frame PD arrays, what phase we're in for a market maker buy or sell model, power 3, what time of the month are we in, right? We're in the last part of the month. So what does that mean? Well, we're in July. Okay, where is the July open? July open is right there. Okay, let's think about this for a minute, okay? Just think about this. Analyze this with me real quick, okay? So this is the body of the monthly candle. At one point, it looked like this for the month. But then we pulled back now because what happened at this point, right? When it went down there, it hit the monthly fair value gap that we talked about. Mind you, we outlined all of this. So this isn't like something new, but I want to reinforce this real quick because we're at the end of the month, the last week, essentially, or the last, one of the last weeks of the month. Price looked like this at some point. The open price was here for the monthly open. Price went all the way down, but now we're all the way back up here. So what does that look like? Right? What has been created? We've had a large wick. So all of this is part of the wick for the monthly candle. It makes sense. This is a huge range for the month. We went all the way from up here all the way down. Right? So if we go to the monthly chart, right, we went from all the way up here, that small little wick, which you could see right here, right, that little wick up there. So we've had a bearish power 3, big time bearish power 3. And now we're in the latter portion of the month. So what has happened? We've now decided to come off that low. What have we talked about that helped us anticipate that this retracement was probably going to happen? Think about what I told you guys on Sunday. The body closure of this candle could not get below this low. It tagged that higher time frame PD array, and then we aggressively repriced above, closing back above the lows. Okay? Right, well above the lows. Right there. Very slight difference. But nonetheless, when you look at it from this monthly perspective, we've had a huge bearish candle. Okay? Closure above that low after we hit a PD array. Expectation, the price is going to retrace into a logical internal range liquidity pool. External, if we're bearish, is lows. Internal, which comes after external range is taken, is fair value gaps and order blocks and wicks like this and whatever's in the middle of the range from the high to the low. And what has happened? Right? Prices basically looked to try to run up here. We set equal highs. Okay. Failed to get up there. So what did today do? Today ended up running up. Today in itself from overnight ended up giving us that push above these equal highs back into the higher time frame level. And this is all, again, just the wick of the higher time frame. Okay, so it's been a bearish power 3. It's the end of the month. So the expectation of this pullback is not unreasonable. Okay? It's completely viable. Because we're at the end of the month, even if this does look to try to go lower going into the next month, it may not offer it, right? We've already offered a huge monthly range, bigger than most of the ranges that we've had from, as of recent. And we were kind of stuck in this range here, bouncing around. So July was used off of CPI to get us outside that range, right? So everyone's been sucked out. And it's a higher time frame level. the expectation of a strong rejection like that is totally reasonable. Right? So with all that stuff being said, it makes sense that we're given this little retracement. We're still not fully confirmed that bullishness is going to overtake long-term for price, to go against sells. It hasn't fully committed to it yet. We got early signs, right? We do, if we go to the daily chart, we now have our change in state of delivery. Okay. So if we are going to continue to see that buys are going to unfold, we have a large wick in here. Okay, so large wick. We have change in state of delivery. We have strong rejection, and the wicks upper 25 to 50%. These candles are being respected. What did we talk about over here with this idea that I shared with you earlier? That's a strong signal, right? And if we can get this to be coupled with this change in state, and then eventually it overlaps this fair value gap, that's enough for us to now aggressively attack the buy side delivery and get away from the downside objective. But that may take a little while to be able to solidify that opinion, so you can be as confident as you possibly can. Right now, if this today or tomorrow or just this week ends up displacing and we get closer back down to the lows here and dollar keeps going higher, then are you going to look to be bullish? I wouldn't be. Right, that would solidify us continuing to seek shorts overall. Does that mean that you can't take buys if you're short on the higher time frame? No, you could still take counter trend moves, but you got to adjust your risk accordingly, and you have to know what you're looking at. We know exactly what we're looking at. None of this is a shocker. None of this is confusing. It was a little tricky in here, but you guys literally saw me call out moves that worked out inside the chaos. Have I called one trade setup that did not work out? At least 20 to 30 points. I've only called like, what, one here, one here. That one may have been a little iffy, but nonetheless, the baseline worked. It went straight down to the target. How about this low? I talked about this being the low of the day. It attempted one more time, so I was waiting, right? Ended up taking the low of the day off a little too soon, and then we got displacement. I took an entry here. I told you guys about this setup here to go higher. All of that worked out, right? And then once price gets above here, you could have taken that. If you didn't, you could have taken that. But this breaker and this short, I called both those out ahead of time, and this one too. And they all worked out. So again, chaotic scenario, but we understand price. So you can reason with the chaos. And if at any moment, if I would have taken 2 losses or shared something that resulted in 2 losses, I wouldn't be talking about the chart right now. We would have closed it early, and we would have chalked today up as, just a losing day. On to the next. But, they're very far and few between when we have those kinds of days. I literally can't remember the last time that I had a call in my private group. Maybe you guys can enlighten me, those of you that are in my private group. Do you remember a call where I called setups that for the most part did not work? That we had a very difficult day reading price where we just couldn't figure it out? I can't even remember a day, like the most recent day. I don't even know if we've had a day like that this whole year. We've taken losses, but there hasn't been one day for me personally in the last 4 years, or one day this year for the private group, where we just couldn't figure it out. I just don't know where it's going to go. It's too shitty. Even when it's too shitty, we're able to call setups and identify clarity short term. It's not going to be like long term. I'm not going to aim for this low if we're in consolidation, or this high, right? Like way out here. It's all we'll switch to a short term perspective. But I don't know. I know some of you guys are in my private group or on the call right now. Shit, let me know. Do you remember the last time when we called or had a live call where we just didn't know at all what to do? I just sat here confused, right? And this consolidation was a little tricky, but Literally, we navigated multiple setups inside of this. And again, it's all recorded. But hey, if you guys remember a day, maybe I'm forgetting, just let me know. Let me know in the chat. But yeah. So I'm looking for also calls on Discord, shared ideas. Yeah, all the details for that, if you look on the top of the screen, you can actually join the team and look at the details up there. Scan the QR code, or you can look at the link in the description. But yes, it's definitely a really, really good community. Only if you're trying to study and actually take initiative. It's not for the weak. It's not for the lazy. It's not for anyone that doesn't take it serious. See, look, Emmanuel said, nope, always delivering gems. Emmanuel's in the private group. Shout out to you, Emmanuel. Yeah, at first, Silent, I was alone too. I was alone for most of my beginning 2.5, 3 years. Fast forward to my 7th year, this year. I'm very, very happy that I've been able to find throughout that time lots of people that were helpful. 2 people that outside of ICT, I will never make enough money to truly pay them back for what they've done. There's just not enough money in the world. If the sound's low, it's probably on your end, because I would have had somebody telling me throughout the whole 2.5 hours that it was low. So it's going to be something on your end, bro. I mean, I don't really remember a day in the past few years, let alone Maddie. Hey, you and me both, bro. This time is just flying too quick. It's ridiculous. Emmanuel said, learning so much so fast, an accredited acceleration program over here. Man, hey, that's an awesome statement right there. I appreciate you saying that, because that's my objective. That's what I literally try to do. And I'm grateful that you feel that way. That means I'm doing something right. I appreciate that opinion, bro. You know, we are definitely pumping out as much value as I possibly can come up with. And we have active live price action while I'm teaching. So I'm doing something that's very, very difficult if you think about it, while also trading as well and answering questions at the same time and still being accurate and still just absolutely slaughtering the market and having one-on-ones. I mean, it's a lot, but I'm still, luckily it doesn't affect the quality of what I teach. If it did affect the quality of what I teach, I'd have to shift the way that I do things. But thankfully, you know, for whatever reason, I'm able to do this. I think it's just because I have a passion for both things, like trying to pass this blessing forward. And I've just done so much work when it comes to trading that it's just second nature what I do. Like, I don't even have to think about the things that I'm doing. Like, it's just automatic. I've done the same stuff for years. Everything that I do and look for and understand about the market has become kind of second nature. I've spent tens of thousands of hours, probably way more than that, just simply sitting, studying, like every waking hour, blowing accounts, wasting money, having mentors, paying for trading psychologists to help me, paying people that have double the experience that I had at the beginning to give me their wisdom. So all the stuff you see me doing, the person that you see me as today, the trader you see on the screen who comes and shows up every day, is not the same person that just started or had 2 years or even 3 years experience. You know, I almost have a decade of experience at this point of relentless study. And even if I could go back and look forward, and it took me all of this time, all 7 years to get to where I'm at, and then, you know, for me to finally be profitable, even if it took that long, knowing what I know now and what I'm able to do, 7 years is nothing. It's hard to see that light at the end of the tunnel when you're first starting, especially when you have a hard circumstance that you're going through. Trust me, I know. I was homeless. I mean, I had so much chaos happening. I just was really in need of something to change my life. Lots of dark days, that's for sure. But even if it took that long, knowing what I know now, if I could put you guys in my mind, if I could transfer my understanding of what's ahead of all of you, if you stick to this, you would never even consider being negative or worrying about a losing day, or you would never even worry about it. You'd be so content, which I hope in some of you I've been able to instill that in you. I mean, you can only see something so many times to just think like, wow, like, yeah, there's something here. Like, this stuff is truly amazing. And quitting is not an option, But I wish I could put some of my perspective, just transfer it directly into you, like take a chip, stick it in you real quick, right? And you just let you see what's ahead of you if you just don't quit. Apply what I teach you guys. Do the right things. Give yourself some grace. Be patient. Don't overtrade and over leverage. Follow the rules. If I could show you what the result is from that stuff, what it could be, you'd be shocked. You really would be. So again, we had another retracement in here that ended up rallying. So again, all of this is now a balanced price range too. Once we peaked above this high, the only way I would have looked to try to even consider shorts is if we would have broke down below here. And then that would be a market maker sell model, but this completed a market maker buy model. We got a high, low that took stops. So these consecutive up candles here. It's a bullish breaker. And a breaker here. If you don't like the breaker, guess what? You have a low, high, failure swing mitigation block. So breaker and a mitigation block working hand in hand together. Because why? They're brother and sister. Emmanuel said, definitely connecting so many dots. Beautiful. I'm grateful to hear that, bro. And mind you, I'm just trying to be a conduit. You are the one going in, making sense of everything, putting it together, looking at it, getting your hands dirty. So when you become successful, when you get that clarity, I just played a small role. You guys all deserve all the credit. No one else, not ICT, nobody else. I'm just here trying to be a guide, share my experience so that you can make the right decisions. And then be confident, you know what I mean? More important than anything. So you can be confident in yourself. All right, so this about does it for what I really wanted to get into today. I think we did some good work today. Multiple setups. We shared reality of the condition. It's harder to trade if you had a hard time, if you took a loss, whatever the case may be. As long as you followed the rules and everything that we've outlined, or most of it, has made sense, that is a positive day. That's a win. Some days are going to be harder than others, and you're going to win some, you're going to lose some. But as long as you have a process that's repeatable, you have nothing to worry about. Eventually, the numbers will work themselves out. And here, if you depend on the numbers, there's a pretty good chance, something good may happen. I can't promise profitability. I'm not a financial advisor, and nothing I say is financial advice. But, you do your own due diligence, see if there's any validity to what it is that we do. And I'm sure you will be pretty surprised if you aren't already. Yeah, let me answer some questions real quick and make sure I didn't miss any. Appreciate you saying that, Axe. Yeah, you just joined. I think you started with me on YouTube. You just joined, and just every day. You see, you think about it. Let me know what your opinion is, right? Coming from YouTube and what we do here, moving to the private group and seeing the live calls every day, would you say that what I'm saying is truthful? Or am I just blowing smoke up everyone's ass, lying, trying to make it sound better than it really is? X, because you're newer, and you did, I believe, start with me on YouTube. What's your opinion on that? Is what I'm saying about what we do as consistent as I say it is? Because I know Emmanuel just confirmed that, shared his experience, but I want to know yours. You just started too. So let me know in the chat while I look for other questions. Did I miss any other questions? Like how you break down price. I'm talking about ICT's lecture yesterday. I didn't watch his lecture. Okay. Yeah, I didn't miss anything. Happy to find people to make it and succeed in trading. Yeah, you don't gotta hope, brother. You have to know. You have to have certainty. You have to be certain. Like I know for a fact that I'm going to be successful. That's the level of conviction you got to have. And you may kind of doubt it at first, but I would not even speak that into existence. You could think it all you want, right? You could think it. That's fine. Whenever you're talking out loud, you need to be positive. Anytime you're journaling, you need to be positive. There's no hope. We don't go off hope. If we hope we're going to be successful, it's a pretty big risk. You know, this stuff works. There's nothing justifying doubt in whether this stuff works or not. This stuff 100% works. And it's proven by hundreds of thousands of people showing it, let alone me. I'm just a small fish in a huge pond, you know, but we're all pretty much doing the same thing. We all have access to very similar things. And it just works. You don't want to hope. You want to tell yourself, yeah, I know I'm going to be successful. Even if you don't fully have conviction behind, you know, whether you can or can't be successful, you need to know until it manifests, you need to be telling yourself, I know I'm going to be successful. You got to change this mindset. You have to. You can't beat yourself up. You cannot be thinking negatively. If you take a loss, you're learning. It's not the end of the world. You tell yourself, okay, I took a loss, I did it wrong, I made a mistake. Not I made a stupid mistake, or I'm stupid, or any of this. I made a simple mistake. I'll do better on it next time. And I'm learning, and I'm going to keep getting better, and I am getting better. Every day I'm going to continue to grow. And this is just part of that growth experience. It's a growing pain. That's all it is. Your bones don't stop growing just because they hurt when you're younger, going through some growing pains. You know, it's not, you're not fearful that your bones are going to disintegrate because you have some pain. Just like how you shouldn't be fearful of your whole career not working out if you take a loss. If you're going to take trades for the next 20, 30 years, a loss today, think about how irrational that is when you fast forward, go 30 years into the future. You're where you want to be, you're successful, right? You put all the work in, you struggled, you went through the ups and downs. And then you look back at maybe some of your journals where you were so negative, like, oh man, this and that. Just think about how you're going to feel when you do arrive, because this stuff works. This stuff works. Trading, ICT concepts, they work. There's not even a question. The question is, are you willing to put the work in to become a professional with it? Because now it's solely dependent on you, and you have to believe in you. No one else, it's not nobody else's responsibility. You have to believe in you. You know, you can't be the driver in the car that doesn't believe in your driving skills. You know, you can't be a commander in your army, which is your trading business, and your money is your soldiers. You can't be unconfident in your commanding skills when you send your army into battle. Every dollar you spend is a soldier in your army. You got to treat that with care. How do you do that? By being responsible, not over trading and over leveraging. Like if bombs are blowing up everywhere, are you going to throw 100,000 of your troops in? If it's like, if in this example, if it's like high resistance, are you going to over trade and over leverage and spend as much capital as you can to try to make back a loss or whatever the case may be, and sacrifice all the soldiers that you have? or a big chunk of them, you wouldn't do that. So every day is a new part of the battle. Every day is an opportunity to learn. If you take a loss, there's nothing wrong with it. You're going to take a loss. I take losses. You will learn how to be able to make it back eventually, but it's going to come from your skill set. Any money that you lose right now could eventually come back tenfold. You know, just really depends on how you operate. That's the risk in the market. You know what I mean? How professional are you trying to make this? Are you trying to treat this like a hobby, or are you trying to treat this like a business? Hobbies don't pay unless those hobbies are turned into a business and then treated as such. In that case, they're not a hobby anymore. So trading cannot be a hobby. It can't be something you do once a week. You take a look at the chart and study once a week, right? You don't journal at all. You don't think about your psychology. All you think about is an entry. You don't really care about the framework, right? You can't have this mindset. You can't go in and just wing it. You got to have a reason you're going to get in the market. You got to have a process that gets you to that reason to get into the market. And we teach that here in a very organized way. ICT teaches it. It's scattered on purpose, but he teaches it too. You know what I mean? Well, he is the source. He gives people all these puzzle pieces, and he makes you go figure it out, which is really difficult when you're by yourself. That's why a community like this, someone that does what I do, you know, it's very helpful. Someone that does exactly what I do, minus the live calls publicly, right, is the exact type of people that I had to go find, right? The two people that I found outside of ICT who do exactly what I do with you, who walk through price exactly the way I do, two people helped me get to that point in myself. I spent $12,000 on them, 6,000 each. Like they were no, they were not easily accessible people, right? And then I paid a trading psychologist. His name is Trading Composure on Instagram. For those of you that want to go look at some of his stuff, go look at that channel, right? Go look into what he does. It's that serious. You have to put a lot of investment, either in time or money, into becoming the best version of you, whatever it takes. But you want to vet the people that you're learning from, obviously. You don't want to just learn from anybody. I don't encourage any of you just to take my word for it ever, especially those who want to join my private group. Spend time with me here on YouTube for 3 months. And then if you like what I do, then make a decision. Don't just impulsively try to join. Because again, I don't want everyone to join my group, right? I only want those that are serious, those that want to really learn, that are willing to do what is asked of them. And if that's not someone, right? If that doesn't fit your description and you just want signals, you know, I mean, I give signals, but not in the traditional sense. You have to understand what I'm talking about to be able to see the signal. And until that's the case, there is no signal. It's just me determining where price is going to go. But then once you understand what's going on, you start to see it. It shows itself to you. And then I point things out, sometimes more obvious than other times. But I make you work for it because I don't want you to be like a drug addict and I'm the drug dealer. Here, take this signal, get your fix, get your dopamine real quick. Like, I don't want to be that way. There's enough of those people on social media. It's counterproductive. I got painfully destroyed by following people that cater to that. And there's a lot of them that do. And if you don't have time to trade and that's what you need, there's really good, reputable people that will manage your money or give you signals. But you have to just accept that that's what lane you're going to want to go down. I don't encourage that. Even if you have a busy life, you could be a swing trader. I teach people how to swing trade too, right? I've helped multiple people learn how to swing trade. I'm developing an options system. So we're going to start getting into options at some point as well. And then, of course, we have futures. And then I also have long-term investing. So it's a multifaceted skill set that you learn as an investor, not just a trader. And everything that we talk about is helpful in assisting you to branch out to all these other things. So, eventually your mindset spreads, it expands when it comes to what's possible in this industry. But it all starts from understanding price. And that's what I teach, how to read price. Where's it going to go? Why is it going to go there? How should you consider thinking about things? How should you consider losses? How do you work through those things? How do you make back drawdown? How do you find setups? How do you incorporate other setups with your main setup? How do you validate a trade setup? How do you cultivate a trading plan? What should you do? What should you not do? When to trade, when not to trade? You know, Situational and conditional awareness, seasonal influences. I mean, there's just so much. There's so much that we go over. But that's why my skill set's where it's at. That's why I'm able to be on the chart and find setups the way that I do every single day. Right? So yeah, just some things to consider, guys. What we do here is serious business. And those of you that stick with me, I know you guys are serious people, and you guys are going to get some serious clarity the more that you hang around with us, because that's all we're providing is clarity and how to get there, the roadmap to clarity. Maybe I should make a series on YouTube called that. Sounds like a good name. Maybe I'll make a project around that. I already got some ideas hit me right now. What I could do with that to be super helpful to you guys. But yeah. So let me see. If there's any last minute appreciate y'all for sticking with me. I know, we've kind of gotten away from looking at the chart. I think we've done enough work though. So, but appreciate y'all hanging out. Silent, no worries, bro. I appreciate the appreciation. Appreciate you hopping on. Everything works. Just show up and commit to the work. Yeah, show up, commit to the work, and then make sure you are following instructions. Because your ability to follow rules and do the right things is very, very important. If you have like a small amount of time to study, but when you study and learn things, you're applying the right things, that's more beneficial than studying and not following the rules, not being able to make any changes, and then just emotionally letting our emotions get the best of us, but studying every single hour of every day. We may be studying a lot, but if we're not in the moment doing the right things, or at least focusing on cultivating the right things through that experience, there's a lot of wasted time that can happen. Thanks a lot, man. I swear the best thing that happened to me is when... Dang, I appreciate you saying that, bro. It's a big statement. I appreciate the appreciation. So I've been doing the last 2 months. Okay. Some money I don't have to touch. Yeah. Yeah, don't go into debt trying to do this, okay? I don't encourage that. Biggest thing I had to learn. Biggest thing I had learned was stop. Giving profits back is not consistency. Yeah, it's 100%. I mean, sometimes it's unavoidable, right, Tony? But that is true. You got to learn how to lose less, and you got to learn how to protect the money you make. Okay? Those are two things that are just undeniably some of the most important stuff you'll ever learn. And what do you know? We teach that here, right? But yeah, so I guess we'll wrap it up there, you guys. Thanks again for, all of the love and support. Again, if you guys do get value, we've had 154 people view this call, and not many stick around to hear the value, which is very strange. People are very strange. But hey, the statistics in trading are what they are for a reason, right? More people fail than succeed for a reason. It's because not everyone's built to think the way that we do, and that's okay. Or they just want to be entertained. I mean, calling trade sets a workout is pretty entertaining to me, but to each his own, right? Let me see. Really appreciate everything. That's my daily quote. When I'm putting this in my head. Okay. 2 minutes. Okay, yeah. I'll check the DM in a little bit. Okay. But yeah. With that being said, God bless you guys. Again, thank you guys for choosing the WMG family as your place to spend your time when it comes to the markets. If you guys have any questions, just let me know. Of course, I'm always around. I do got a couple one-on-ones I have to do today. I'm gonna go see my daughter for a little bit and then have to hop on those. But outside of that, those of you here on YouTube, I will talk to you guys on Sunday. I'll share some stuff on my free Discord as well. If anything changes or I want to mention something. And then you guys in my private group, I think we have news tomorrow, the unemployment claims. Oh no, we only got crudo. So we'll be live around. I don't know. I'll start sending messages around like 4 a.m. We'll see who's up. It depends on if you guys are awake. If you guys are awake around 5 a.m. Pacific Standard Time, uh, just reply to or like one of the things that I share, and then I'll send the link out. Or you could just DM me and say I'll be up, and then I'll just send the link out, whenever that time is. But yeah, I'll see you guys bright and early tomorrow and the rest of the week. And those of you on YouTube, again, thanks for the support. God bless you. And I will see you beautiful people either in the Discord, the free Discord where I'm sharing stuff, or on Sunday. And I'll see you guys in my private group tomorrow bright and early, okay? So with that being said, God bless, and I'll see y'all tomorrow. Have a good rest of your day, you guys.